income. Meanwhile, the Swiss bank set aside $1.5 billion for share buybacks next year. CEO Sergio Ermotti is preparing to step down November the 1st. And that's your latest Bloomberg Business Flash.
Ritika, thank you very much. Live from London and New York. Good morning to you. I believe, Lisa, this is the part of the programme where Tom Keane takes a little break.
Yeah.
Gets a coffee, so he's not in a mood for the next 2 hours.
Correct.
That's why he's not with us right now. That's cute, isn't it?
He
gets a little break in the morning before he joins us.
He may try to talk over the check. We'll see how it goes, though.
Let's have a go right now. Equity futures on the S&P 500 shaping up as follows this Tuesday morning. Good morning to you all. A lift on the S&P up 25. We advanced 0.7% in the FX market. I'm waiting for it. Where is he? Euro dollar 118.10. In the bond market up a basis point, 0.78%. I think it's so sweet he gets a little nap in just for a couple of minutes. Up next on Bloomberg TV and radio, another 2 hours of this. This is Bloomberg.
When opportunity knocks at the door, don't say, blimey, I've still got my pajamas on. Say yes to stuff and it will take you interesting places.
We're clearly going through some very unusual times and enormous difficulties getting groups of people to agree on things.
From Bloomberg's European headquarters in the City of London, join us on Leaders with Lacqua.
Valuations, particularly, sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
Recovery path looks very much secure.
The market is telling us that a multi-year bear market in cyclicality is probably over.
Once you pass through the noise, the markets just go back to what really drives them.
Central banks and governments are in this together. They're one wallet.
We need support for the economy, both for monetary and fiscal policy. And monetary policy has already done a huge amount.
This is Bloomberg Surveillance with Tom Keane, Jonathan Farrow, and Lisa Abramowitz.
From New York and London, for our audience worldwide, good morning, good morning. This is Bloomberg Surveillance Live on Bloomberg TV and radio. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro. 14 days away, the attention of the world on the United States of America. And Tom Keene, Washington, D.C.
In a fog as well, as we saw the image there. Good morning on Bloomberg Radio. What we're seeing on TV is a foggy Washington, and the fog is in place off of fiscal stimulus. John, I've got to go to this debate Thursday. All of a sudden, it's really sort of crept up on us, I would say, after the dueling debates of last week. But, you know, there it is on Thursday in Nashville with a mute button. It'll be interesting.
We know, Tom, that this campaign is unhappy, not with the mute button, but with the topics. They want this debate to be about foreign policy. And I imagine, Tom, if the president wants that debate Thursday to be about foreign policy, he'll do his best to make it just that.
Yeah, there's no, well, he's going to do that. And he's, you know, you wonder if the foreign policy is going to be the uproar over the Bidens and the New York Post article and all that raging debate, which frankly was out front before our Giuliani interview of the other day. But yes, they want it to be foreign policy. But John and Lisa, help me here, Lisa. This is really, really important. In that, does foreign policy matter in a presidential election? I'm not sure it does.
I would argue in this case it does, and I would argue not so much with Russia as much as with China. And what we've seen is an increasing amount of betting on the Chinese economy, not just because they've handled the virus perhaps arguably better than we have, because they believe that Joe Biden will be a little bit looser when it comes to policy. John, I think we still have to keep watching the data, though.
Well, let's talk about the data. The numbers coming out of Procter & Gamble right now, boosting their year organic view on revenue to 4 to 5% positive. We've got companies out there still doing well, Lisa, and we've got parts of this economy red hot, still on fire.
Yeah, and one of those big areas has been housing. We're going to be getting housing starts and building permits for the month of September at 8:30 a.m. We might see a little bit of a cooling in some of the recent red hotness as a result of the wildfires. However, I do know that Vettville is moving out of the home of the Keens, and he is going to be taking out a mortgage because I hear they're very cheap right now.
But this goes, seriously, this goes to the up that's out there. I don't think Procter & Gamble, John, is a small matter. They've got decent organic revenue growth. They've got a really nice pop here, 120 to 140 in the length of the pandemic. I think that's indicative of what's happening not in tech.
I would agree. I got really worried for a moment and thought that a dog might be sent my way, Lisa Abramowitz, when you said Vettville was moving out. P&G numbers lifting their view. I think we've got Netflix after the close a little bit later, Lisa.
Yeah.
And that's a big one for this market.
It is. It'll be interesting to see whether the momentum, the stay-at-home trade, the fact that everybody and their mother has a Netflix account now because there's nothing else to do, the idea of how much that has continued or whether the momentum there has stopped. And then, of course, you know, it's another day in the market, so we're going to be talking about fiscal support debates, and this is the deadline later today. The new deadline, John. Yeah, right.
Is it?
That's for you to decide.
Is it
That's
the deadline?
I mean, look, before the election, if they don't get anything done today, what are the chances that we actually get something done before the election, John? The sort of gray area here is what if they agree on a bill and then Mitch McConnell just doesn't sign off on it or doesn't push it through? There still is plenty of uncertainty regardless of what happens today.
I agree. I thought the deadline was the end of July, but that came and went very, very quickly. Here's the price action this Tuesday morning. Equity's doing nicely. Equity futures are positive, near session highs, up 27. We advanced 0.8%. In foreign exchange, just euro resilience. I think there's a story there. It's just remarkable. What's happening in Europe right now? Lockdowns, Ireland, Wales, restrictions across the UK, across the continent, France, Italy, Spain. And a euro still retaining a 118 handle going into some data on Friday, which hasn't looked good in Europe even before all this. Look, I know I keep talking about it. It's just something to look out for. And the bond market yields up a basis point, 0.78% on a 10-year yield, even with all the talk of all that stimulus, Tom. Still can't break 80 basis points on a 10-year.
Really good point in that we moved top to bottom yesterday, 700 Dow points, and bonds really unched, and that real yield stayed very stable at a negative 0.95, John. So, you know, the correlation was not there yesterday in the equity uproar.
I would agree with you. Joining us now, Amy Wu-Silverman, RBC Capital Markets Equity Derivatives Strategist. Amy, fantastic to get you with us on the program. 2 weeks away from an election. It's your world. Volatility was so elevated a number of weeks ago. Then people faded it. Then we came back a little bit more. What's the approach now, Amy?
Yeah, it's been fascinating to watch because, as you said, I think the last time we spoke, the options market was clearly pricing a contested and protracted election with uncertainty very high in December. That's completely gone away now. And to be quite honest, the options market is pricing a fairly boring term structure, which always makes me a little bit nervous with, 2 weeks to go until a pretty major event happening. If I do say, I think at this point, we're probably underpricing the likelihood that you get that protracted contested election. And we're also pricing a tail event, which is that Trump actually wins the election. Right. Obviously, the polls say that those are less likely. But remember, those tails have become fatter in 2020 than I would say in other years.
Amy, some of the measurements here, Chris Verone was on, the great technician the other day with Strategas, and he was really talking about the breadth of this market improving. Do you see that on a fundamental basis?
I do. And, I think there's two things that sort of happened. In August, we had unbelievably narrow breadth. It was really just all tech. Two things changed coming. The first is people started putting on more macro hedges, just simply because we have a U.S. election, but also just because we're coming into year end. So most people who are doing well in their portfolios are putting on overall market hedges. And the second is, as we head into earnings season, people are playing names other than, obviously they're still playing Facebook, Amazon, what have you, but they're also playing other names. So we do have improvement in breadth, which obviously helps with some of the correlations we're seeing on the index levels.
I want to build on something that you said, Amy. You said that we are currently probably underpricing the risk of a contested election. Just how contested does that election have to be before it roils the market, and how significant could the sell-off be?
Yeah, two great questions. So the time frame that the options market was obsessed with was, call it November 20th through December 18th. So that's the period of time between the two options expiries. We saw that 3 to 4 volatility points fully elevated relative to everything else, and now that's completely come down to the point where it's actually under November. So, that tells us that people are not focused on that December 14th date where the state electors are supposed to submit their ballots. That's the time frame originally, Lisa, that people were very, very worried about. So call it, after election by, 4 weeks. And then look, in terms of downside, the bets we are seeing placed has the market down, at least 5%, but more down to 10%. So those are the hedges. Those are the strikes of the hedges that we are seeing placed in the market right now.
So let's talk about how you invest around this, Amy. I think for a lot of people outside Wall Street, whenever the Amy Wu Silvermans, the Julian Emmanuels, the Mandy Zoos come on, people get confused by the language, the jargon you guys use about this market, volatility. You know the story. Can you advise people outside of that world what on earth they're meant to do going into the back end of this year?
Sure. I think it's just to think of it this way. The first is, I would just think of it as there is downside concern that is building, and we see that in hedges being placed, but not nearly to the extent that we would expect given this environment and given this event. So basically the market is not as well prepared as it normally is for these kind of downside events. And the second is, obviously, if you are looking to place a bet to the downside yourself, buying put options, something straightforward where you're protecting against that downside, it's still relatively inexpensive because the option market prices for that type of protection has declined in the last few weeks and has made it cheaper to do that.
Amy, if I look at SOAP, Procter & Gamble is a proxy for boring within blue chip multinationals. It's a wonderful log linear trend for 10 years. And then like a moonshot, P&G goes straight up. They've got a 3 to at best 4% dividend growth, yet they're trading at a 27 multiple. Is that in the textbooks you studied?
Yeah, look, a lot of things that have happened in this market I have learned are not in the textbooks I study. One of my professors was Burton Malkiel, who wrote A Random Walk Down Wall Street. He's pretty good. And, he's really good. But, he taught us about the efficient market hypothesis at Princeton. And then I got into Wall Street and I said, markets aren't that efficient, unfortunately. So.
Yeah, I mean, John, this is a really important observation by Ms. Silverman here. The idea, we forget, John, about where these valuations are. And yes, some have maximum revenue growth or maybe Apple profitability. But, boring stuff, John, whether in London or in America, is just priced to perfection now. We've never seen this.
Well, there's a reason for that with some of these brands, and Lisa, I know you can speak to this. it was always about the brands that you recognize, and everyone just ran towards them in the pandemic. I caught up with PepsiCo and the CFO about this a number of months ago, and that was really the story: brand recognition and the gravitation of the consumer towards the brands they recognize at a time of stress. How sticky that demand is, I think we're about to find out, Lisa.
Yeah, and I really find it fascinating, a social study in terms of how people respond to a pandemic. Lysol sales, absolutely on fire, and the company that makes them, Benckiser, is sort of a similar story to what we saw with Procter & Gamble, up more than 22%. People want clean homes, and they're going to be obsessive about it.
Amy Wood-Silverman of RBC, great to catch up. Amy, thanks for being with us. A couple of weeks away from an election. Can you imagine Tom Keane cleaning the apartment, Lisa?
No.
Can you picture that?
He gardens. He does
Tom
garden,
doing the
he
cleaning.
says. No, I cannot imagine him cleaning.
He gardens.
I've seen him
He
do the
gardens
dishes
the
before.
terrace. Is that gardening? I've heard someone doing the dishes when we did radio from home.
I remember.
I'm pretty sure
No, that was the
wasn't
help
Tom.
in the kitchen.
Do you
What was
remember
so sad about that was through two
Afterthought.
sets of doors, you know. They left the doors open, John. I'm sorry. You know, it just,
Cafe Keen. They were some dark days.
I miss
The
Cafe
depths of that
Keen.
pandemic. Do you miss it? I don't miss it at all.
no, I don't miss it at all.
I don't miss it at
no,
all.
and thanks to our tech team for jumping through massive hoops on all that remote stuff.
Yeah, hopefully we don't have to go
Alongside Tom Keane and Lisa Abramowitz, I'm Jonathan Ferro, hoping we don't have to hear someone making Tom a coffee, washing the dishes afterwards, the dog coming in, bark, bark. The circus of several months ago in Kazakhstan. Coming up later, Nobel laureate Joseph Stiglitz right here on Bloomberg Surveillance.
With the First Word News, I'm Rishika Gupta. House Speaker Nancy Pelosi and Treasury Secretary Stephen Mnuchin are drawing closer to an agreement on a coronavirus relief package. The two will talk again today. The deadline Pelosi is set for having clarity on a bill that could pass by Election Day. Even if the two sides reach a deal, Senate Republicans have been balking at the price tag. And President Trump and Joe Biden will be muted at times in Thursday night's final debate. The debate commission says that each candidate will have an uninterrupted 2 minutes to speak at the beginning of each segment of the debate. Then both candidates' microphones will be turned on. During the first debate, President Trump repeatedly interrupted Biden, and both candidates talked over the moderator. Goldman Sachs has reached a long-awaited deal with the Justice Department over its role in Malaysia's 1MDB scandal. Bloomberg has learned that Goldman will pay more than $2 billion. That's broadly in line with the bank's prior reserves and analysts' estimates. Meanwhile, Goldman will avoid a U.S. criminal conviction. And the price of oil is lower today after OPEC and its allies warned of a precarious outlook for the market. Russia's energy minister says demand has been hit again by the resurgence of the coronavirus. OPEC Plus is said to add almost 2 million barrels a day to the market starting in January, but now that could be delayed. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishika Gupta. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
Is it your expectation to do this another 5, 10, 15 years?
It's like Whole Foods is my daughter, and I literally married my daughter off to the richest man in the world. I just kind of came along to make sure the marriage settled in well.
Forget Dr. Fauci, what he said is, no, don't close it to China. I said, I'm sorry, doctor, you're a wonderful man. And he is a nice man. You're a wonderful man, I'm closing it. I saved thousands of lives.
He was informed that it was contagious and airbound. And what did he do? He stood at rallies and he stood before the American people and he didn't tell you what he knew.
President Trump in Arizona and Democratic Vice Presidential nominee Kamala Harris in Florida. From London and New York this morning, good morning. Alongside Tom Keene and Lisa Abramovich, I'm Jonathan Ferro. 2 hours and 12 minutes away from the opening bell this Tuesday morning. Good morning to you all. Equity futures near session highs on the S&P 500. We drift higher. Yields drifting higher too. 0.78% on a 10-year. In the equity market, up 25, call it 26. We advanced 0.75%. The euro 118.11. The calls regionally get my attention. This from HSBC in the last couple of minutes. We are tactically most optimistic on the US and Asia in credit and equities, but much less so on Europe. And Tom, that seems to be the story at the moment for many people.
Interesting. Yeah, HSBC with some wonderful calls there. And, of course, Steve Major with an incredibly important call that West Ham would come back against the Tots as they did this weekend.
Oh, did you hear that?
Did
you hear that yesterday?
Mr. Major sent me a love note.
He had a nice little dig at you yesterday.
Yeah, he did. He really went at it. Right now, this is a treat. Kevin Cirilli with us. He's been with us so often on an hourly basis, the chief Washington correspondent. Kevin, I want to go narrow right now. The Republican from North Carolina, Mr. Tillis, has really had a back and forth with Mr. Trump. He's in a horrific race in North Carolina. Yeah. Does he want the president of the United States to campaign for him, or is Trump a liability?
You know, I don't think he knows, and that's such a brilliant point. New information out this morning in the ABC News poll that came out that has Joe Biden leading in the battleground state of North Carolina by 2 percentage points, 48% to Trump's 46%. So that's well within the poll's margin of error. Coupled with this intense brawl, use whatever adjective you want to use there, between Senator Tom Tillis, a Republican in North Carolina, against Cal Cunningham, who's the Democratic challenger. They are in a brawl. There's a texting scandal with the Democrat. It's playing out on the local newspapers, but so goes North Carolina. That could be a clear indicator of just the tightening of this race. Because look, we're looking at the national poll. We got to throw out the national polls right now. This is about battleground polls.
Agreed.
This is about a 2 percentage point spread in North Carolina, a 3 to 4 percentage point spread in Michigan, and a tightening of the race in Wisconsin.
But I mean, I know we're all socially distant, but as a proxy, do these two candidates want their two presidential candidates on the same podium with them at a social distance?
Yeah, I think, look, I don't have the reporting I haven't reached out, for example, to either of those campaigns, but I think that the president who is going to be appearing likely in South Carolina is sending a clear signal to Senate Judiciary Committee Chairman Lindsey Graham that, look, this is when the chips are falling where they are. You're either with him or against him, and that is baked into both sides of the perception. I want to even go even more granular. I want to go to Nevada District 2, because that is where it's a rural district in a battleground state of Nevada. Democrats are eager to carry Nevada, but this is where there's an uptick in COVID-19 cases. I mean, you got to remember here, New York City, the cities got whacked with COVID-19 first at the first part of this year in early March and whatnot. Now we're starting to see, based upon Johns Hopkins University data, that increase throughout the Midwest, throughout the South. And these are battleground areas, but also a big unknown for how the voters there are going to interpret some of these cases and how that will impact, if at all, turnout on Election Day.
John, just so you know, there's more jackalope in the 2nd District of Nevada than there are people.
Every place you name is more money, more dollars. And Kevin, it just makes me wonder whether the president in this campaign has enough left in the tank to fight these battles.
Well, I think that's a great point, and I think you've seen sort of this reality, this reassessment in terms of what the top advisors to the president have had him color his campaign trail events with, which is essentially he's trying to portray himself now as a political outsider to the donor class who won't be beholden to donors. That was reminiscent of what he did back in 2016. We're talking about Nevada. You can't talk about Nevada without talking about the Sheldon Adelson and how he has poured $75 million into this race. So look, he still has the donors here. I just remember back when everyone would, as a political reporter, you'd look at the weather forecast or you would look at the traffic maps, remember, for turnout. Now we're all going to be looking at that terminal chart with COVID-19 cases and upticks in cases for the various districts.
Kevin, a new era for sure. Another thing that's happening sooner than the election is this deadline that John and I were denigrating earlier and saying, is it really even a deadline? This idea that Treasury Secretary Stephen Mnuchin from the Middle East, Nancy Pelosi, House Speaker, are going to come to some sort of agreement possibly by the end of today to get a fiscal support deal done before the election. What does this deadline really mean, given the fact that Mitch McConnell has to get enough support in the Senate from Republicans to sign off on this thing?
Two things. It's a long shot because it's being presented as a long shot. It has a lot of upside for Speaker Pelosi and President Trump should they actually, in the long shot chance, get to some type of a deal before the election. The second point that I would make here is that the calculation that Speaker Pelosi is making, should this have to wait, as it looks increasingly likely that it would, until after the election, the landscape, the political landscape, I can't stress this enough, and just how the shifting of political capital amongst all of the various players at the negotiating table will look a lot different after the election. We don't know which way. We don't know what the spread or whether or not there will be a mandate for either one of the parties, but there will, without question, be a shifting of political capital after the election in terms of these negotiations.
Kevin, final question from me on this. Is Leader McConnell even a part of these conversations?
Yes.
Or does he just sit them out?
No, he's I hear your point. By being keeping his cards close to vest, he is without question a part of the conversations, and that's classic Leader McConnell style. He is a dominant wall, so to speak, because I can't stress this enough. You go to Texas, you talk to the Texas energy community, you talk to the Texas C-suite community, they're very apprehensive as to why all of this money has to be injected into the economy, upwards of $2 trillion, and they're very wary of that, and they're playing a long game. I'm not saying it's right or wrong. They're playing a long game after the election at a Republican Party that's going to be looking for which direction to go in, and there are reminiscent contours and tides, currents of what happened in 2008 with the Tea Party.
Kevin, good to hear from you. Kevin Cirilli, Bloomberg Chief Washington correspondent. Tom, we keep coming back to the same story. That's the voice that matters, and we haven't heard enough of it. Leader McConnell.
Well, it's his method, and I think it's been widely publicized. And again, it goes back to the media, and I think I'm as guilty of this as anybody, is fixated on the popular vote. Senator from Kentucky knows this is about the electoral votes and the power of his Senate. Right now, they're very powerful. He wants to maintain that.
From London and New York this morning, good morning. This is Bloomberg Surveillance.
Everything around us, including the way we work and live, has been interrupted. Uninterrupted service is peace of mind. Juzi from customer support is responding to a 500% increase in daily call volume, no matter what. We keep on, so you can keep on.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
From London and New York, for our audience worldwide, good morning. Live on Bloomberg TV and radio alongside Tom Keane and Lisa Abramowitz. I'm Jonathan Ferro. 2 hours away from the cash open, New York, the futures are up by 24. We're up by 0.7% on the S&P 500. Euro firm, $1 weaker through much of G10. Euro dollar 118.13. And in the bond market, yields higher by a single basis point to 0.7824%. Stimulus talks down in D.C. Brexit, the B word, we won't mention that. We are all waiting for the noise to pass.
Well, the noise will pass, John. It'll be amazing.
Seema Shah of Principal Global Investors weighing in.
really drives them, which, as we've seen this year, is going to be the pandemic, and it's going to be central banks.
That was tight. Mark McCormick of TD Bank, Global Head of FX Strategy. He adds, I'll get there. I'm going to get through today. Risk assets are looking past the tightening, reflecting the double dose of macro stimulus and global efforts to normalize things. Market expectations seem to lean on vaccine approval late this year that would start the normalization process. Tom, I believe we have Mark McCormick with us now. Why don't you bring him in?
We do. Mark McCormick's with us, and what's so important here is to remember currencies trade in pairs. This is really, really foundational. There's a giant, William Klein, emeritus at the Peterson Institute, who wrote paper after paper on this. And Mark McCormick, you know that what this means is people that suggest bold moves in a foreign exchange piece like the dollar often are wrong. Can you call many big figures of weak dollar into the next year?
Yeah, I think it depends on which currency you're picking. Like you said, it's relative. Is it euro? Is it renminbi? And, you know, what's the outcome in the next 2 weeks? Is this a blue wave or is this a divided government? Because that's going to have a really major impact on whether or not the next big move is a couple cents, couple percentage points, or whether or not we're still kind of stuck in these ranges and we get actual reversal of the weakness that we saw in the dollar the past couple of months. So I think a lot of people are taking their chips off the table. There's not a lot of big trading themes ahead of the election. We see vol coming off a little bit, given the scope that there could be, less of a contested election. But I don't think anyone's really willing to make that decision right now.
But Mark, just to pick dollar yen, I mean, as a proxy here, and for those of you that aren't knee deep in dollar yen, it's a major, major identifier of global trends. The fact is they keep saying through 100, 90, even people down to 85, and it doesn't happen, doesn't happen, doesn't happen. Why?
It's a great question because, as you mentioned, Klein, if you take any of your econometric fair values, which we run all of them, your fear, your beer, your PPP, they all tell you dollar yen should be at 90, 95 cents. The problem is that's one component, it's one factor. Valuation is one thing of many things that drives currencies. And dollar yen right now is sidelined because the drivers that have been kind of moving it in one direction the last couple of years, whether it be equities or fixed income, those two things are kind of doing opposite things now. So we're kind of seeing risk assets go up. We're seeing fixed income move in a different direction. And what we're seeing is dollar yen is kind of sandwiched right now. So it's not really trading at all with any of our risk models. And what we're seeing is Swiss is just much more closely correlated with global risk dynamics. So I think until we see what is most important for yen is how Japanese institutions deal with the currency and how they deal with their flows. It's very, very likely that the yen is going to strengthen because of current account and the balance of payments dynamics. But what we do need to see there is the dynamics of capital flows shifting back into Japan. So foreigners starting to buy Japanese equities again, which is what early signs we're starting to see, which I think is offsetting some of the, the yield dynamics around the world. And also the last thing to add is on an unhedged basis, Japanese yields are just more attractive now than the average of the rest of the G10. So it makes more sense to just kind of leave your money in Japan. So those forces are changing for dollar yen.
Yeah, that is just amazing to say that Japan has value in their bond yields, considering the fact that Japanification has been a dirty word for the bond market globally, and yet here we are where they are competitive. I do want to talk about capital flows into another country, and that would be China. I'm looking at a yuan, an offshore yuan, that is the strongest versus the dollar, making a new strong level here today, the strongest since July 2018, and it raises a question: how much will the Chinese authorities allow their currency to strengthen, and is this a bet on a Biden win in the U.S.?
Yeah, it's a good question because I think a lot of it always, when you come back to the PBOC, it's always about kind of the magnitude rather than the levels. So we have seen some pretty aggressive moves in dollar renminbi this year. I think a lot of it, as you mentioned, does hinge on a potential blue wave. I think what a lot of the investors around the world are grappling with is that, while Biden and the Democrats are still hawkish on China, they will kind of return foreign policy back to an orthodoxy that I think most people are kind of familiar with. So the geopolitical uncertainty comes off a little bit. And what you have is more cooperation with your allies, but that you can still kind of address China in a more hawkish light than what we've seen. So I think what's important is that the capital flow dynamics are one where there's definitely an anti-dollar bias. We have negative real rates in the U.S. that would are likely to be there for many years. And if you look at the two best performing assets year to date, it's gold and Chinese equities. So the Chinese currency is likely strengthening off of the unhedged flows that come with foreign investors buying Japanese equities, which in a world of really low yields and less geopolitical uncertainty, and the fact that markets have been pricing in, again, a blue wave is a baseline scenario that's positive for global risk, that's really been very beneficial to emerging markets. And along with that, you just have the general COVID crisis, which has been good for currencies in the satellite of the renminbi. If you think of Korea, Taiwan, and some of those other currencies that are kind of linked generally to Chinese growth expectations.
So, Mark, there's two anti-dollar trades that you described there, the Asia bucket, the precious metals bucket, which, of course, gold is a part of. Let's get to the third point, which I know you're covering right now. How does the euro fold in to those stories at the moment?
Yeah, it's a good point, too, because it's euro, as we mentioned at the onset here, it's always relative. So, if you're thinking euro dollar, what are the relative drivers? It's not what people are familiar with. It's not rate differentials. It's not the yield curve. Part of it is equities, which I think if people were to look behind the scenes, what you could see is unhedged ETF flows into the Eurozone are positive again. What we also have in our macro-based, top-down models is European equities are undervalued. U.S. equities are 9% overvalued. And then if you layer into that the growth and the mobility and the lockdown, all that comes from COVID, those numbers are still in euro's favor. Even though we've seen more anecdotal discussions of tightening lockdowns in Europe, the general lockdown curve, whether it be Norway, Sweden, broader Eurozone, is much lighter than it has been in the U.S. And if you map that into city mobility trends, like City Mapper, looking at major European cities versus major U.S. cities, we're still seeing more mobility in major European cities versus the U.S. So, and then if you layer into, again, the uncertainty of the U.S. election, or just the fact that we're not going to get any more stimulus in the U.S. right now, at least until next year, those are all things that I think are layering into a better dynamic where the euro's outperforming the U.S. on those relative dynamics, even though it seems like the news flow has just gotten a little bit more negative for Europe. And the last thing I would add is when you kind of look at COVID, the European COVID curve is running very high, but if you look at hospital admission rates, they're much lower than where they were in March and April. So there's much different context the way COVID is working through global economies right now.
I'm just looking at the economic data. There's a PMI out on Friday. The composite could be sub 50 in a moment where I think everyone was hoping the recovery would still be ongoing. Mark, just a final point from you, please, on fiscal stimulus and what it means for the US dollar. We had Russ Kostrick of BlackRock on with us earlier on. Blue wave, fiscal stimulus, all that good stuff. Dollar bearish. Is that the equation for you, or is it different?
Yeah, I think blue wave is definitely dollar bearish, largely because, again, you're reducing that geopolitical uncertainty, which really helps the emerging market, especially the Asian complex. It also helps Europe. If you think about the trade uncertainty we've had between the United States and Europe throughout this cycle. So a blue wave is absolutely, I think, the most positive outlook for risk assets, largely because it allows the fiscal stimulus being put in place around Europe and Asia to really kind of help those economies grow out of the COVID crisis. Your worst case scenario is probably a Biden presidency and a Republican Senate, largely because we may have gridlock and we may actually see nothing bigger than the $500 billion that McConnell has kind of cited on. So in that, we're still kind of focused on that. And I think this is why markets are kind of stuck in this range now, because the blue wave is really the most likely outcome. But if Biden were to win and to not flip those 3 Senate seats, then we kind of have to reduce some of the optimism that the markets have been pricing in the last couple of weeks. So I think that's the way you have to think about it, that blue wave, very good for global reflation, very good for emerging markets, very good for global equities. Global equities outperform U.S. equities, which is why the dollar would weaken and why partly that valuation story would kick in and why dollar yen could still go lower, even in a positive reflation world.
Mark, great to catch up. As always, Mark McCormick there of TD Bank. Tom, I know you and I bring up the polls and you get nervous and start thinking about 2016 and shrug them off. For me, I think for market participants, the most important lesson of 2016 wasn't the polls. It was getting it wrong on not who would win the presidency, who would take over the Senate, the House, but what it would mean for markets. And we all remember that morning, waking up to that result. It wasn't that we got a red wave. It wasn't that that was a surprise. The big surprise is how all of a sudden that became really, really bullish for this market. So I'm always hesitant sitting here and hearing this huge consensus about what a blue wave might mean for markets.
I agree totally.
Because when you wake up, that morning things can change, and they change quick.
I grew up in a house, John, that had a political fixation about this, and I totally disagree with what I grew up with. To me, so much more important is going to be just the actual economy, what we see, the prospects of the pandemic. Vaccine is way more important than the politics, other than if we actually get a legitimate stimulus that's not just income substitution, but again, creates infrastructure. But that's a hope and a prayer right now.
And then we start to think about the administration, Lisa, the Treasury Secretary, regulation, taxes, regulation energy, taxes, buybacks, dividends, the financials, the banks.
I think this time is a little bit different than 2016 when it comes to what the response will be in the market. Because if you do get a dominant wave of Democrats, you will get some sort of fiscal support bill. That is pretty much a unanimous assumption. I think the question is, John, how long will it take before those taxes, before those potential restrictions on dividends or buybacks or whatever else come into play? That's the key question. Some people saying 3 to 6 months.
Lisa Abramowitz, October 20th, quote, "This time is..."
I thought you only did that
different.
To me.
I'm going to just bow out, go to the bar. Which one, Tom?
Jotting it down.
Which one should I go to, Tom?
It's got several recommendations. Depends which exit you leave from the building, Lisa.
Got that right.
Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro. This is Bloomberg.
With the First Word News, I'm Ritika Gupta. House Speaker Nancy Pelosi and Treasury Secretary Steven Mnuchin are trying to beat the clock. They're narrowing their differences on a coronavirus relief package, but Pelosi has said that by the end of today, there must be clarity on the bill if it's going to be passed by Election Day. Pelosi told House Democrats there are still significant areas of disagreement. And it's a victory for Democrats in a fight over ballots in a battleground state. A divided Supreme Court allowed a 3-day extension for mail-in ballots in Pennsylvania. Republicans wanted to reinstate the state's requirement that the ballots must arrive by 8 p.m. on election night. There's a price the European Union has to pay before trade talks with the UK can be restarted. The British government is holding out for more concessions that may involve a public statement to make it look like the EU is conceding or emphasizing that the two sides are sovereign equals. The longest scheduled airline flight in the world resumes next month. Singapore Airlines is restarting its 19-hour flight to New York on November the 9th. Singapore will use the Airbus A350 for the trip to JFK Airport. The airline is betting that demand will increase as the coronavirus eases in its home country. Global News 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Women leaders were actually better at controlling the deaths from COVID-19. Do you think out of this pandemic, we'll see more countries be willing to elect female leaders?
When we look at women leaders, we tend to project on them baggage that they shouldn't bear.
Women are given an opportunity when no one else wants to do the job.
Women had a very clear objective. They wanted to save lives.
The women leaders, if you look at their careers, have also built up a level of trust.
In fact, women have to be better at communication in order to be elected as leaders, whereas this doesn't hold true for men.
We need to get those sexist stereotypes out of our head and give women a fair run for leadership.
Trying to change the stereotypes about women is not only the business of women, but men have to be part of it.
What is happening today in India is actually a determination to rebuild our economy.
India has an opportunity not only competing in the space of the factory of the world, but a very big opportunity to compete in being the office of the world.
Live coverage of the final presidential debate Thursday at 8:30 p.m. Eastern Time here on Bloomberg Television and Radio.
We think the recovery is going to be decent. And really, it's predicated on having some sort of vaccine available, let's say, in the first quarter or two that's widely distributed. And if that happens, you ought to see growth pick up quite a bit. So we're definitely not in the Grim Reaper camp.
A little bit of optimism of this Tuesday morning from Mike Schumacher of Wells Fargo. From London and New York this morning, good morning. Alongside Tom Keane and Lisa Abramowitz, I'm Jonathan Ferro. Here's the price action this Tuesday morning, shaping up as follows. We advance on the S&P 500, up 21, up 0.6%. In the bond market, Tom, just south of 80 basis points on a 10-year. There we go.
It's called doing a Tom Keane.
I need
what
a drink.
In God's name are you doing,
I need a drink.
John?
There we go. There
you
we go.
Okay?
Just about. I feel better now. There you go. Don't know what it was. Just choking. Should I do it again?
No.
Can you get the market board up again?
Bring the market board up again.
We'll do it again. Come on. We'll do it again. We'll go again.
Let's just start over.
2. Mike,
Welcome back.
Q. Futures up 21 on the S&P 500, up 0.6%. Euro dollar 118. Sounds like I'm selling cattle. In the bond market, up about a basis point, 0.779% on a 10-year. WTI, $40 and around about 85 cents. That's better. There you go. I need a doctor, and I think we've got one next.
Killed it. You did not nail it. Robert Murphy with us now, Northwestern University, of course, here on the virus and looking at a more broader perspective. Dr. Murphy, what I find fascinating here is the 19 million people of New York City and greater New York in February and March and April versus the loneliness of 800,000 some people in North Dakota. Is the pandemic the same in North Dakota now, where it's horrific, I'm told, versus what we saw in New York City?
On a per capita basis, yes. What's happening in these states in the Midwest and in the West, they don't have that many people, but on a per capita basis, it's worse than what New York was.
That's where then what is the solution here? I mean, it's completely different medicine. I mean, Fargo is not, the Upper East Side, the Upper West Side, et cetera. What is the approach out there to get control that is different than the approach that was taken by Governor Cuomo and Mayor de Blasio?
It's very simple. It's all politics. The politics out there in that part of the Midwest are the anti-science people. They don't believe in masks. They don't believe in social distancing. They believe that freedom to them means that they don't have to do anything they don't want to do.
Dr. Murphy, based on the trajectory of the virus, how many more deaths can we expect in the United States from here until the end of the pandemic, whenever it may be?
Well, that is a really good question, and that number has been fluctuating lately by the real experts in this country. Had it been estimated about a month ago that there would be about 300,000 deaths by December 31st of this year. That's already been increased to 400,000, and even higher, of course, after that, because it's actually not slowing down. It's actually speeding up. We have over half of the states in the United States are increasing rapidly. And 12 out of the 50 states and several territories had the highest 7-day average in their history of the whole pandemic. So we don't know. It depends when the vaccines get released, how many people take them, and how long it takes to get the vaccines rolled out into the population. It doesn't happen overnight.
Dr. Murphy, the other aspect of the United States in the pandemic has been the average age of individuals who have died from COVID-19. It is younger than in other regions around the world. Why is that?
Why? The United States has an epidemic of obesity, of diabetes, and hypertension. We have generally poor nutrition compared to many other countries, and physical activity with people is actually pretty low. So we have basically an unhealthier population than many other countries. And so all those factors come into play in terms of how severe coronavirus affects somebody.
Dr. Murphy, you're affiliated with McCormick School of Engineering as well. I want to get a little mathy with you now. There's a great YouTube video by differential equation experts in London on a virus, and there's 3 functions to the differential equation and a lot of dynamics. The only thing that matters to the public is the x-axis. The seeking of herd immunity basically says you go out the x-axis, out and out and out, until you get to some critical mass. Do you have an estimate of the death count that we will sacrifice if we affect herd immunity?
Yeah, herd immunity is something that we typically measure when we're giving vaccines. To use herd immunity as a goal without a vaccine it's almost criminally insane.
Thank you. This is really important, folks. I don't mean to interrupt. I want the good doctor. I want you to back up and explain why that is, please, sir. That's critical.
Because if you take that approach, where we're just going to let everybody get out there, get infected, we'll protect the vulnerable people, that's just BS. How can a third of the population? What are you going to do? You can't hide a third of the population. You can't isolate them. It's ridiculous. So if you do that, you're going to probably kill up to 3 million people in the United States. We have 330 million people. 3 million people. There's in the United States every year, only 2.8 million people die per year of all causes combined. We're going to double the death rate in 1 year just to prove this crazy, theory works. It's absolutely insane. And they keep using, the Swedish model, they don't have to wear masks there. Hey, let's face it, the United States is not Sweden. We're a very, very different, diverse country. And the Swedes, they took a different way. They have much higher rates than every other country around them, and they had one of the highest rates in Europe. I mean, it's not exactly the super success story. Their economy crashed to 8.3% anyway. This whole concept, this herd immunity concept, it's really insane and cruel, really cruel.
Doctor, just finally, what is it about the homogeneity of a place like Sweden that means they can take this route?
What about Sweden? I'm sorry?
You mentioned that they're all the same over there. Do you mean the homogeneity of society compared to a more diverse population like America?
What is the deal with Sweden? Right. Well, it's a relatively homogeneous population. They don't have this huge obesity problem. They're more physically active. They have smaller family units. They don't have big clusters of they don't have big clusters of dense cities. I mean, the whole country has fewer people than New York City area. It's a very, very different situation with them. And also, they had a lot of voluntary measures. It's not like they didn't do any mitigation efforts at all. It was all voluntary. And plenty of people volunteered, as witnessed by the decrease in their economy by 8.3%. It's certainly things were not going on as normal.
Appreciate the clarity, Doctor. Fantastic to get you on the program. Come back soon. Dr. Robert Murphy there of Northwestern University on the challenge, Tom Keene, of herd immunity.
Yeah, there's no question. You know, I'm sorry I'm bringing this up, and I think as people can tell, John, to me it's a third rail. I've already gotten mail in disagreeing that is supporting herd immunity. I'm just trying to listen to the experts, John. That's how we invented surveillance.
I hear you. I got on the Tom Keene shift for a day. Losing my voice already. I might sound like Tom by Friday. That's exciting.
No chance.
Alongside
This
Lisa.
is Mookie. This is the curse of Mookie Betts.
I need a few cigars for that, that's for sure.
A great YouTube video on exponential differential.
gender-neutral language at the airport and on its flights. Instead of the greeting, ladies and gentlemen, the English announcements now use phrases like all passengers or good morning and good evening. There's no change to the Japanese version because we already use minasan, which is the honorific form of everybody, and that's already gender neutral. JETA becomes the first Japanese airline to make the change as part of its greater initiative to tackle gender-based discrimination, following some other carriers. Air Canada and EasyJet started using gender-neutral greetings last year. Japan Airlines also ditched its mandatory high heels and skirts rule for female flight attendants earlier this year after the Kutu movement went viral on social media. That was the nationwide campaign to fight the rule that some women must wear high heels at work. So JETA now allows female flight attendants to wear trousers and flats if they want. Activists here have been pushing for change, fighting against entrenched gender traditions. The Japanese government does not legally recognize same-sex partnerships, although a growing number of cities have started to. So this change towards gender-neutral language could be a symbolic step for inclusivity in Japan.
Some things you see coming, some things you don't. The trick is to be ready for anything. John from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
Their CPG history, their experience, and really how we might be able to combine together to really create this fantastic public company. And so we kind of got into the SPAC thing a little bit before it became such a hot method of going public.
We explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
When everything around us, including the way we work and live, has been interrupted, uninterrupted service is peace of mind. Kimmy from Customer Support is responding to a 500% increase in daily call volume, no matter what. We keep on, so you can keep on.
V-shaped recovery path looks very much secure.
The market is telling us that a multi-year bear market in cyclicality is probably over.
Once you've passed through the noise, the markets just go back to what really drives them.
Central banks and governments are in this together. They're one wallet.
We need support for the economy, both for monetary and fiscal policy. And monetary policy has already done a huge amount.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Bloomberg Surveillance, Jonathan Farrow, Lisa Abramowitz, and Tom Keene. Thrilled you're with us here. 14 days to the election. It is a Tuesday in October, and we staggered Tuesday. Obviously, the Supreme Court letting Pennsylvania go Wednesday, Thursday, and Friday after that election to count ballots. We've got lots of politics to talk about, and also extraordinary markets after the drop yesterday, John Farrow, that we saw. John, how much do you think linked yesterday's 700-point Dow drop to stimulus, the whole kit and caboodle?
Not me, but I think many other people might make that link. I think if you want to make that link, there is an inconsistency, Tom, because Treasury yields actually climbed. And you would think, if you believe that all of this stimulus was going to drive yields higher, then stimulus talks falling apart would mean lower yields, not higher yields. And I think the temptation at the moment, Tom, is to take every single piece of price action every 5 minutes, every hour, every day. And to draw a line back down to D.C. from Wall Street.
Lisa, what do you see in the stimulus? Secretary Mnuchin in Israel for that important signing of the United Arab Emirates, Israel, and the United States of America. He's going to have a call, I guess, with Pelosi. Pelosi's going to get briefed by Weston later on Bloomberg. What are you watching today in stimulus?
I'm trying to understand Mitch McConnell's role in all of this. In other words, what kind of agreement will House Speaker Nancy Pelosi come to with Treasury Secretary Stephen Mnuchin that actually has legs and could pass, right? What do we mean by this deadline? It's not passing in Senate. It's not passing in House. It's coming to some sort of understanding. The chances, I don't know. I just don't feel like it's that likely at this point, given how close we are, Tom.
Oh, we welcome you across the nation on Bloomberg Radio, on Bloomberg Television, indeed worldwide on both platforms. Thrilled with the response we've been getting. Thank you for the hate mail I've received in the last number of days. And one of them, John, was off Verone yesterday of Strategas. Chris Verone, very optimistic. I got a gloom and doom guy emailing me in saying this guy's nuts. Verone is optimistic, and he notes, as you did, John, in his morning note today, yields did not flinch yesterday afternoon.
They didn't, but they haven't done much for a long time, and they peaked after this pandemic in early June. First week of June, about 95 basis points, Tom, and we haven't reclaimed that optimism. That was peak happy talk about the rotation away from big tech, peak happy talk about reopening and how well things would go. Faded pretty quickly, and we've not got back to those levels, even with all this optimism around fiscal stimulus, $1, $2, $3 trillion down in D.C.
Now, let's get to the data right now. Futures up 19, up a little more earlier. Dow futures bounced back. Again, negative 700 through the top to bottom yesterday, positive 167 right now. The VIX comes in, not a point, but a better VIX, 28.57. Farrow all over the yields today, 0.78%, rounded up to 2 digits. We do the 30-year bond to 4 digits, 1.5732. Well, very quickly here, Lisa, you dazzled me out on Twitter with the Bloomberg grab of the 530s spread. Discuss.
Basically, a lot of people are betting that the yield curve, the gap between longer-term yields in the U.S. and shorter-term notes, shorter-term rates, will continue to widen, especially if there is this blue wave. And you are seeing that continue with this gap widening to nearly the most since 2017, the 30-year, 5-year gap. Basically, I don't know if this is a reflation trade or just this idea the Fed has short-term rates pegged and the supply will become an issue. Of course, a lot of naysayers. We'll discuss, Tom.
We will see a headline out right now from the Department of Justice. They're going to file an antitrust suit against Google on Tuesday. And, of course, that goes right into earnings. I mean, John, that's in the backdrop, isn't it? Before we get to Tobias here, this whole regulatory path here it's tangible into the tech earnings season, isn't it?
It has been for the last 5 years or so, Tom, and not much has happened to change the business models of these big companies. And I would say the big point to tie together what we've just discussed with that headline right there, the biggest threat to these big tech companies and their valuation at the moment, Tom, might not be regulation, it might be higher yields. And if we can get higher yields, higher real yields, then that's what fuels that rotation, at least in the minds of many on Wall Street.
Well, we will see. Right now, we've been waiting for this. Tobias Lefkovich with us with Citigroup, the acclaimed Surprise Index, and, of course, their chief U.S. equity strategist. Tobias, what does your Surprise Index say right now?
So the Citigroup Economic Surprise Index really spiked significantly post kind of the reopening of the economy. And in that respect, it couldn't sustain that level that it had before. If you look at it historically, it really sharply rose, and now is easing back. And you could almost predict it was going to, just because of how far it had run. And sometimes this model is taken a bit too aggressively by people on the street. It really just couldn't keep staying this high as it was, even if the news was good.
Tobias, so much of the reopening was just mechanical. We went from shutdown to reopen, and then bang, the sequential improvement's obvious and predictable. What I've been surprised by, Tobias, is that we haven't reclaimed those peaks of early June in various parts of the market, Treasury yields, the rotation hopes. What do we need, Tobias, to get back that feeling again, that sentiment?
So I'm going to take a bit of an issue on what the bond market is saying, because if you look historically,
sure.
The bond market, just 10-year Treasury yields would move very consistently with the moves that we would see in TIPS break-evens on inflation expectations. That was true for about 5 years, and that kind of broke apart, called it the last 6 months, where the TIPS break-evens, inflation expectations have been rising, where the 10-year yield hasn't. The only other time we really saw that was back in 2011, 2012, during the periphery debt crisis, where, again, you had central banks being aggressively buying sovereign credits, and as a result, you saw this differential. We have this, if you want to call it, artificial suppressant on the 10-year yield, and I'm not sure it's indicating as clearly what's going on in the economy versus what the central banks want to do in terms of keep funding costs low. So the bond market, in some respects, is telling you inflation picking up, the economy getting a bit better, and the outlook being stronger over the next several years, not necessarily the next several months. And then you start getting into timing of vaccines, you start getting into the stimulus discussions, things like that, about the nearer term. So I think there's a little bit of a differential here in the fixed income markets, and depending on what you want to look at, you can make an argument.
Completely with you, but the correlation's pretty strong. If you look at nominal yields early June, that's where we peaked post-pandemic. Look at S&P 500 banks, that's where we peaked post-pandemic, that first week of June, Tobias. So what is the difference between now and early June, and what do we need to see to get back to that at a time when so many people are still hoping for that rotation away from big tech?
Right, so I think on the rotation front, if you want to think about it in a slightly different description of value versus growth, which is the big debate amongst most investors that we talk to, there are three elements to the value, trade. There is the financials, which you rightly pointed to, nominal yields. You need them to go up to make the financials get better. There's a second piece, which I will call cyclicals, where ISM trends have improved and they are acting a bit better. We did surveys with our clients, and they're looking to 2021 as areas like industrials and materials leading the market. And then if you look at the third component, what I call the COVID-impaired names, travel, entertainment, leisure, hospitality, those kind of things, you need vaccines. So there are different elements to what would get you going within different parts of the value trade and causing rotation. Your point earlier, John, about the the technology names coming off, it is going to be a function of higher rates to some degree, because you do your discounted cash flow models and your terminal values will be affected meaningfully. It'll be around regulation. It'll be about taxation. It'll be around China. It'll be around a variety of factors, not a single, magic bullet, if you want to call it that.
So do you expect big tech to underperform if there is a blue wave?
I think the blue wave argument would do the following. It would generate another, if you like, reason to believe industrials could do better if you get strong infrastructure spending, for instance. I'm not sure the blue wave itself defines 10-year yields. I'm not a fixed income guy, so it's not really my area. But I also think that investors went from a month ago saying this is going to be a tight election to with potentially contested results to, okay, it's for sure a done deal. Mr. Biden wins, the Senate flips, things like that. And as we learned in 2016, going in with that kind of confidence is probably maybe misplaced.
Tobias Levkovich, great to catch up with you, sir. Citigroup Chief U.S. Equity Strategist. Some headlines coming from an interview with the President, I believe, that has just taken place on Fox News. The President's saying the mute button, it's crazy. He says some funny things are going on with the debate committee.
Tom agrees.
I don't think he was referring to you a little bit earlier on this program, Tom. I think he's thinking about Nashville, Tennessee, and Thursday with the VP Joe Biden. So this is the setup, Tom. There are 15-minute segments, and each segment will begin with 2 minutes of uninterrupted conversation. One person speaks 2 minutes, the other person speaks 2 minutes. Those rules already agreed. Reinforcing those rules, you will have a mute button to stop someone from interrupting you when you have those 2 minutes to talk. But those 2 minutes were always meant to be uninterrupted. A bit like me trying to talk now with you going to cut in all the time.
Oh, John, good job. Good job.
There it is. Okay, I'm back. But Lisa, weigh in here. I think this is really important. I would suggest the mute button benefits the president because he's going to be able to cogently get out his message he's desperate to get out.
I think it's going to put the moderator in even more of a hot seat in terms of when to press the mute button. Is it exactly at 200? Do you give them a chance to finish their thought? How do you get that in? I mean, it becomes very difficult. You just sort of, they're all of a sudden talking and then...
Oh my God! You wired her up as well.
This is just beautiful on radio. You're both at it.
This is for those of you on radio. Pharaoh's just crushing it with the engineering.
He's doing a great job.
I mean, you got double mute buttons now.
Well, I mean, honestly, it's going to be really tricky for the moderator.
Tom Keene, Lisa Browitz, I wish. Coming up on this program, Isaac Boltanski, Compass Point Managing Director of Policy Research. 40 minutes to go. Just another 40 minutes.
John, welcome to my world. That's all I got to say.
You got a couple more days, too, John.
This is Bloomberg Surveillance.
With the First Word News, I'm Ritika Gupta. The Justice Department is poised to file a landmark antitrust suit against Google. According to the Wall Street Journal, the suit will allege that Google engaged in anti-competitive behavior to preserve monopolies in search and search advertising. Google has been the target of scrutiny before, but it's always avoided a real showdown with the government. House Speaker Nancy Pelosi and Treasury Secretary Steven Mnuchin are drawing closer to an agreement on a coronavirus relief package. The two will talk again today. The deadline Pelosi is set for having clarity on a bill that could pass by Election Day. Even if the two sides reach a deal, Senate Republicans have been balking at the price tag. President Trump and Joe Biden will be muted at times in Thursday night's final debate. The debate commission says that each candidate will have an uninterrupted 2 minutes to speak at the beginning of each segment of the debate. Then both candidates' microphones will be turned on. During the first debate, President Trump repeatedly interrupted Biden, and both candidates talked over the moderator. Goldman Sachs has reached a long-awaited deal with the Justice Department over its role in Malaysia's 1MDB scandal. Bloomberg has learned that Goldman will pay more than $2 billion. That's broadly in line with the bank's prior reserves and analysts' estimates. Meanwhile, Goldman will avoid a U.S. criminal conviction. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
When opportunity knocks at the door, don't say, blimey, I've still got my pajamas on. Say yes to stuff and it will take you interesting places.
We're clearly going through some very unusual times and, enormous difficulties getting groups of people to agree on things.
From Bloomberg's European headquarters in the City of London, join us on Leaders with Lacqua.
That over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Most of our clients we talk to are expecting there to be a really large stimulus in Q1 of next year. And if that happens, then sure, that's positive for the economy. That's a big fiscal stimulus. That's probably good for earnings. But once you start looking through that and you look out 6 to 12 to 18 months, that's when you start seeing the tax increases and the new levels of regulation starting to bite. And I would expect markets may be a little slow to catch up to that.
The stuff that market participants want, followed by the stuff that most market participants do not want. John Lieber there, Eurasia Group, United States Managing Director. From London and New York this morning, good morning. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro. 1 hour and 12 minutes away from the cash open. The opening bout just around the corner in New York. S&P 500 futures up around about 11. We're up about 1/3 of 1% on the S&P. If you get to an intraday chart of the S&P 500, we just rolled over in the last 15 minutes or so on that headline from the Wall Street Journal. This is the lead paragraph. The Justice Department will file an antitrust lawsuit Tuesday alleging that Google engaged in anti-competitive conduct to preserve monopolies in search and search advertising that form the cornerstones of its vast conglomerate. This according to senior justice officials. This just seems to have pulled down big tech just in the last 15 minutes. Not in a massive way, Tom. Just a little bit of a move. Still
agree.
positive on the session.
I agree with a little bit of a move of it. Point to 4 digits, 0.7773 in the 10-year, and futures now giving back up 12. Yeah, make it up 12. Dow futures up 91. There's any number of ways to go with Isaac Boltansky. He's at Compass Point, writes a cute notes on what's going on. I do want to focus, Isaac, on something that's in every interview, which is the outcome of a blue president but a continued red Senate. What will gridlock look like under a Biden presidency?
So I think there are two main points to make in response to that. Number one is it would be far more difficult for President Biden in that scenario to actually get his nominees through a Republican Senate. And so a lot of the regulatory agenda that my clients have focused on, whether that's energy, the environment, healthcare, financial services, a lot of their fears around that would not materialize simply because it would be difficult to get those personnel in. The second point is really about what we've all been focused on this morning, which is taxes and stimulus. And in that scenario, with a Biden White House and a Republican Senate, investors should expect any stimulus to be smaller than the base case right now, and for the tax increases that the former vice president has proposed to not come to pass.
So aside from the taxes, there's also this regulatory overhang that was sort of highlighted this morning with this headline that the antitrust suit against Google will go forward, a long-anticipated one. Isaac, how much political will is there among Democrats, if there is a blue wave, to engage in true regulatory scrutiny of big tech that could affect their earnings?
I got to tell you, the big tech narrative reminds me of infrastructure, in that everyone in D.C. agrees that something should be done. But once you start to drill down, there's very little agreement in what should actually be done. So in big tech, just look at the different issue sets. Are we focusing on content, competition, data privacy? There are numerous different avenues to follow. And then you've got to add on top, there are just too many cooks in the kitchen. Is it the DOJ, the FTC, the state AGs, Congress in a blue wave scenario? So, look, there will be continued headline pressure, but when you actually drill down and you use the benefit of history, whether it's Microsoft, the Bells, or IBM, you see that there really aren't that many tools at the moment to, quote unquote, break up these companies. So the headlines will persist, but in terms of practical impact, I think it's very limited.
And in the end, the market addresses the issue. We saw that with Microsoft. Democrats talking about antitrust, Republicans talking about censorship. Let me just talk about the Senate and the composition of it, Isaac. If it does turn Democrat, just how moderate will that Senate be? And how much of a radical progressive agenda, if it was to go through the House, could actually pass in a Democratic-led Senate?
So this is something that I've been highlighting to clients. About 56% or so of Biden supporters say they support Biden because he's not Trump. And to me, that suggests that the Democratic coalition could have some fractures if they end up winning. And we will have a far more progressive House in terms of policy than we will have in the Senate. And this is important because there are going to be at least 3, possibly even 5, centrist red state Democrats in the Senate, from states like Montana, West Virginia, Arizona. And I think that contingent will push back on the most aggressive and progressive policies that come out of the House. And so that's what informs some of my views when it comes to a blue wave and taxes.
You mean, Isaac, I happen to think you're absolutely dead on here about the power of these centrist Democrats, greatly underrated, and it goes back to Hubert Humphrey and Scoop Jackson from another time and place. How does that set up for 2022? Because the race for 2022 begins that Wednesday in November, doesn't it?
In some ways, we're gearing up for it right now. And so, look, to your point, it's not just going to be the ones that are there. It's also going to be the fact that their ranks will be bolstered by some of these more purple states, whether that's North Carolina or South Carolina or Maine. So their ranks will grow. Furthermore, when we look out to 2022, there are going to be some open seat races in, again, purple states like Pennsylvania and like North Carolina. And I think that will inform Schumer's thinking in terms of policy making and trying to tack more towards the center.
Isaac, just quickly, in the time we have left, does the debate happen on Thursday, given the noise around it still? You assume it still happens?
Look, I think we're going to have a debate. I think that the 2-minute muting function will be interesting, but the remainder of those 15-minute segments beyond those 2-minute mute periods, it's still going to be the messy, convoluted, just deeply concerning mess that we saw the first time. So yes, I think it happens. Yes, I think it'll be messy. And no, I don't think it's really going to impact the election because most voters have already made up their minds.
And isn't that the point? Isaac Boltanski, Compass Point Research, Managing Director for Policy Research. Isaac, great to catch up, sir. That's the issue. And that's the difference, Tom, as well, between 2016 and 2020 and that surge the president had in the final 2 weeks. There were a lot of undecided voters. And there was also another pool of voters going away from the main 2 candidates. There are key differences 4 years later.
Well, yeah, there's key differences 4 years later. You know, a lot's changed. I get that, John. But what I am seeing is what a lot of people predicted. We mentioned Greg Valliere earlier, but others as well, that this is going to tighten up in the last 14 days. And I think we've observed that just in the last 2 days alone. The North Carolina poll shows that. Tight, 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 with a mystery about this election, and then all the gamesmanship afterwards as well.
This market tightening up just a little bit. Here's the intraday chart from what I'm seeing on the terminal right now. +6 on the S&P 500. We roll over. Positive, just 0.2%, not even that now. After 20 minutes ago, the Wall Street Journal came out with a story that today the Justice Department could file that long-awaited antitrust suit against Google. Just a little bit of weight on the tape. No drama, still positive, but you see the move in the last 25 minutes. Outside of that, in the bond market, yields still higher by almost a basis point on a 10-year to 0.777%. Up later, 1/3 of the negotiations on Capitol Hill will be on Bloomberg TV and radio. House Speaker Nancy Pelosi coming up a little bit later on Balance of Power with David Weston. Looking forward to that on Bloomberg.
Is it your expectation to do this another 5, 10, 15 years?
It's like Whole Foods is my daughter, and I literally married my daughter off to the richest man in the world. I just kind of came along to make sure the marriage settled in well.
From London and New York for our audience worldwide, good morning to you all. About 1 hour away from the opening bell in New York. We do fade a little bit on S&P 500 futures. Alongside Tom Keane and Lisa Abramowitz, I'm Jonathan Ferro. Up 10 on the S&P. We advance 1/3 of 1%. With economic data this morning, here's Lisa.
Yeah, we're looking at housing starts, which have been really, really strong, coming in a little bit below estimates with 1.415 million housing starts versus the 1.465 million. Basically, momentum cooling a little bit, particularly as we see the wildfires dent supply and demand. Building permits seeing a different story, the opposite, actually coming in ahead of expectations, 1.55 million. John, this really highlights, again, the K-shaped recovery that we've been seeing, the idea that people who have the ability to go buy a home are doing so, and they're taking advantage of very low mortgage rates, even as you see evictions and rent delays, et cetera, picking up in other regions, just sort of highlighting the dissonance of this economic recovery.
What did we call it? The Hamptons-Manhattan spread? Is that what we called it?
Westchester, Manhattan spread. Yeah, Greenwich you could use as well.
Forgive me.
It's okay. You're forgiven.
The president's speaking right now. Some headlines coming from the president of the United States. He wants a bigger stimulus bill than the Democrats. We'll see if Speaker Pelosi will change her mind. Goes on to say that he expects Leader McConnell to be on board if there is a relief deal. Problem is, Tom, we haven't heard that from Leader McConnell, have we?
No, it's fascinating. I think there is a headline in there from the president on Speaker McConnell, on Senate Majority Leader McConnell, I should say, excuse me. And, you know, I'm searching for it right here. We can do that on the Bloomberg terminal on radio and television. Trump expects McConnell to be on board if there's a relief deal. Okay, John, that's what the headline says.
He expects him to be. Like I say,
yeah.
Is Leader McConnell on board with it? Different question.
Yeah,
we need to hear it from Leader McConnell.
And the money quote from the gentleman from Kentucky, he would like to, quote, make law if we move forward. We'll continue to monitor the president on Fox and various other administration officials using their network, including Fox Business this morning. We'll monitor that for you as we do at Bloomberg. Right now, this is a joy. As we come out of U.S. economic data, somewhat fragile, the mysteries of the American economy, the great European optimist joins us. Eric Nielsen has pieced together a career of battling the doom and gloom crew at UniCredit in London. He writes a Sunday evening note. Even Pharaoh, knee-deep in a bar in Mayfair, reads Eric Nielsen's note when it's published 7 p.m. London time. We're thrilled that Eric Nielsen could join us right now. Eric, is there fear of a persistent economic slowdown, or do you just assume with pandemic solution, with vaccine, we get back to some kind of normal?
Thanks, Tom. Thanks for that introduction. Yeah. No, I do fear that the. I don't fear a 10% drop in GDP, but the second wave will cost on GDP without a doubt. And I worry a little bit about stimulus fatigue in some countries in Europe, particularly Southern Europe, where there is still this fear about public debt, and that would be sad if it were to scar the economy more severely.
You know, Eric, I don't know if you heard it yesterday, but Janet Yellen was absolutely on fire on the show yesterday. I'd never seen a Yellen, or frankly, Eric Nielsen, a central banker like that. She was heated about the need for stimulus. Do you have a Euro optimism that you're going to deliver the trillions necessary?
Yeah, I mean, I think on balance we won't get as much as I would like, and maybe as Yellen would like, but in Europe we will get a good deal. But remember, we are already coming from a hole because the program that were introduced earlier this year to protect labor are all set to run out early next year, and that would impose like a 1% of GDP fiscal tightening unless they are renewed, and they will be renewed. But we would like to see more, right? Ultimately, you need the national governments in Europe to bridge us to the end of next year when the big pandemic, the next generation EU money starts to flow.
How worried are you, Eric, right now about the loss of momentum in this economy, even before these extra restrictions? Seeing the PMIs where they are, where they're expected to be on Friday, and this comes before we shut down places like Ireland in the last 24 hours. Eric, help us understand what is going on with this economy at the moment.
Yeah, I mean, Jonathan, that's exactly right. We all talk about the second pandemic, but they were slowing beforehand already. We could see this. And if you look at European data, for example, household savings were up at 26% in the second quarter already. So you have a lot of precautionary saving or forced saving or what have you. So you really have a retrenchment of the private sector. Investment don't come so long as you don't see a prospect for spending. or selling your products, if you will. So you have to stimulate this domestic demand from the consumption side, and that's tricky when people are scared. And it doesn't matter that much, in my opinion, at least as we can judge, doesn't matter that much of whether it's formal lockdown or it's just the pandemic expanding again, and people get scared, so you don't go out and spend. So I am worried because it's not clear how exactly you get people out and spend the money and get the economy going. But at a minimum, protect the vulnerable in society, protect the sectors that should not go under, or anyone, who knows who should go under, by the way, right? So protect the economy until this beast of the pandemic is behind us, I would argue.
So, Eric, it's often frustrating for me to listen to conversations about Europe because we often conflate two issues, redenomination risk and just the recovery. And I think we've done a lot in Europe over the last few months to reprice redenomination risk. That step forward towards fiscal integration. What I can't get behind is the optimism around the recovery. Do you actually think we can engineer something in Europe that leads to higher interest rates, something we failed to do in the last cycle?
That's a big, big question. The short answer to that is no, because I think the low interest rates reflect big structural demographic changes over the last 20 years. I'm a big believer in the Goodhart book from earlier this year on the great generational reversal. And I think we will have to wait 5, 8, 10 years before we really get those changes, the reversal or the slowdown of globalization, and we're over the top on the demographic stuff. So so I think the best you can do now is be sure that you replace the retrenchment of the private sector with public debt. End of story. The central bank buys it, and you shouldn't worry too much about it, and keep the economy floating and growing ultimately. This pandemic will be over and behind us in a year or two, without a doubt, right? And you just don't want too many scars in the economy at that time.
Eric, when you talk about scarring, I think about these small businesses that have disproportionately been hit by the pandemic, disproportionately gone out of business and account for a disproportionate amount of employment, both in Europe as well as the United States. How big of a concern is this to you in terms of the potential scarring in the global economy?
That's exactly the concern I have. You hit a spot on. I go crazy when I hear people talk about the creative destruction with some sort of a enormous self-confidence that they think that this gale of the pandemic is going to somehow clean out those who shouldn't survive. Now, are we going to let 2/3 of the airline industry go under or something like this? Or do they need support, or do they deserve support? What about all the small ones that don't have PR people who get on Bloomberg TV to tell their story? What about those without the lobbyists? The small restaurants, the small businesses, these are the people that you have to support. The other ones will get through, and they also need support, of course. So my whole point here is this is not market forces that should clean out the weaker, if you will, in a market sense, and so we can innovate. This is a pandemic. It's a health crisis, and we are, as a friend of mine said, this is not a recession. It is the patient has been put in an artificial coma until it's over. And if you need to look after the patient, so and no more deserving that than all the smaller ones who don't get a voice in the bigger community.
That is the argument against creative destruction right now. Eric, we don't do the PR voices. Don't worry. Come on, Eric Nielsen, Food Credit. Great to catch up, Eric. As always, thank you, sir. Front page of the Financial Times this morning, guys. There you see it above the fold. Eurozone heads for a €1 trillion deficit. And the appetite to keep on pumping this debt out and do all of this fiscal stimulus. Let's have a look at what the bond market's been doing. €1.5 trillion in new record bond issuance this year alone on the continent. There was an issue this morning with massive demand out there for it. And I think Joe Weissenthaler Bloomberg put it perfectly. This isn't about the capacity of the bond market to provide more fiscal stimulus. This is about the political will. It's about political capacity, Tom. And I think that's the key issue at the moment.
Well, it's a political will, but also the political will down the road of how do you get about it. We've got Joe Stiglitz coming up, and it's simple. He owns a study of the growth rate, and the growth rate is a key idea here.
Looking forward to catching up with the Nobel laureate next on this program. Joe Stiglitz from London and New York, alongside Tom Keene and Lisa Abravitz. I'm Jonathan Ferro, and I'm running away to fly solo at 9 a.m. Eastern. On my own. Tom, it's been great.
You
we'll do it again tomorrow.
Do you have a mute button with
wait.
yourself at 9 a.m.?
I will mute you for the rest of the day when you try and ring me at some absurd time tonight.
Got that right.
For no reason. This
there's a
is
time
Bloomberg.
shift?
With the First One News, I'm Rishka Gupta. House Speaker Nancy Pelosi and Treasury Secretary Stephen Mnuchin are trying to beat the clock. They're narrowing their differences on a coronavirus relief package. But Pelosi has said that by the end of today, there must be clarity on the bill if it is going to be passed by Election Day. Pelosi told House Democrats there are still significant areas of disagreement. And it's a victory for Democrats in a fight over ballots in a battleground state. A divided Supreme Court allowed a 3-day extension for mail-in ballots in Pennsylvania. Now, Republicans wanted to reinstate the state's requirement that the ballots must arrive by 8 p.m. on election night. And President Trump is turning Anthony Fauci into a scapegoat. He spent the day maligning the government's top infectious disease expert as an idiot, the president said, without offering proof that if he had followed Fauci's advice, hundreds of thousands more Americans would have died. And there's a price the European Union has to pay before trade talks with the UK can be restarted. The British government is holding out for more concessions that may involve a public statement to make it look like the EU is conceding or emphasizing that the two sides are sovereign equals. Global News 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishka Gupta. This is Bloomberg.
Good morning, everyone. Bloomberg Surveillance, Lisa Bramowitz and Tom Keene. Of course, John Farrow with us always as well. Bloomberg Surveillance, a really, really important moment here. We've had a great theme over the last number of days with all the politics that we're talking about to, of course, address the greater economy. Yesterday, it was fascinating not only to see Janet Yellen, but to see a Janet Yellen absolutely on fire over the need for action by Washington. Let's listen.
We need support for the economy, both for monetary and fiscal policy. And monetary policy has already done a huge amount. Fiscal policy response in the United States has been extremely impressive, but actually it's much larger, the fiscal support, than what was done after the 2008-9 financial crisis, but the fiscal support has now lapsed.
And they're all tied together. Janet Yellen there, the 15th chairman of the Federal Reserve System, and joining us now, someone who had to sit there with student Yellen and straighten her out. Joseph Stiglitz joins us, the Nobel laureate from Columbia University. Joe Stiglitz, what was Chair Yellen like as a student?
She was great. She was one of the best students I had. She was one of my students in the very beginning of my teaching. Well, and she lived up to her promise. And
I'll say the least. Probably she taught you some things while she was your student as well. She was that acclaimed without questions through all of her work. Joe Stiglitz, I want to dovetail in here the political season with the economics at hand. Joe Biden is a certain kind of Democrat. If he takes the trophy, can the Democratic Party find a middle ground, a common voice with the rest of America to actually pass legislation and make policy?
Oh, absolutely. I believe actually there's a broad consensus in America on a whole wide range of issues. And I think Biden is in a position to create that middle ground to get that common agenda adopted. For instance, we're concerned, everybody's concerned about healthcare, the cost of healthcare, access to healthcare. The proposal of a public option is a good way of getting it to everybody.
Joe, you're looking at this with your new book, People, Power, and Profits, Progressive Capitalism for an Age of Discontent. Joe, you brought that word, you brought our Steinbeck over to the American economic mind with discontent. This discontent now is absolutely extraordinary. What can a legitimate Biden policy accomplish? What's the first order condition you see?
The first order is getting the economy going again. And Janet was absolutely right. There is right now a need for fiscal support, especially at the bottom. You know, people talk about a K-shaped recovery. It's absolutely true. Those at the bottom are having a very hard time. The unemployment rate among certain groups of the population are very elevated. So that's one thing. But there are certain sectors of the economy that are badly afflicted, and they need assistance. For instance, I'm in one of those, the education sector, research sector. And those are sectors that are going to be vital to the country's future. If we let those weaken, we're not going to have we're going to have a weak economy now, but we're going to have an even weaker economy in the future.
One thing we've been talking a lot about, Professor Stiglitz, in the past few months has been GDP and how it's going to go down dramatically on the heels of the pandemic. And you were recently quoted in a Bloomberg article about how this is not a great measure of people's well-being. You also said high prices in the stock market are an even worse indicator of societal well-being. Focusing on the wrong things can lead to taking the wrong actions. What wrong actions have we been taking up till now?
Well, the focus on the stock market really is perverse, because we know underlying the growth in the stock market are a few companies, Silicon Valley, the digital giants, have been doing very well as a result of their monopoly power. People going in the stock market because interest rates are so low, returns of bonds are so low that they're piling into the stock market. And wages are not doing very well, and that helps the stock market. But all those are things that are weakening our economy. So it's almost perverse. The strong stock market is almost a sign that things are not going well in other parts of the economy. So precisely, we need to focus on the role of market power in our economy, the low wages, the fact that at the bottom wages are the same as they were 65 years ago, adjusted for inflation. And most importantly, we need the aggregate demand going up so that the economy, so that their jobs are there for all Americans. And that won't happen if we don't have that fiscal stimulus that Janet was talking about yesterday.
This is an incredibly important point, the idea that the prices on stocks could actually be evidence of something counter to what may be the healthiest for the underlying economy. Do you think that the response from the Federal Reserve, the U.S. Treasury Department, and Congress has actually increased the disparity in access to funding for small and larger companies at a time when we see unprecedented bankruptcies among smaller businesses?
Well, that's actually very many aspects of what you just raised. There was a program created at the very beginning called PPP that was intended to get money to small businesses, but it was very badly administered, and it didn't work. It got money to the richest of the small businesses, many of whom were owned by very, very rich people. So the intent was perhaps good, but the way it was executed by the Trump administration and by the banks, quite frankly, was a disaster. But more broadly, the monetary policies that we've conducted since the great financial crisis, 2008, of keeping interest rates very low has stimulated the growth in the value of equities. And the equities are overwhelmingly owned by the people in the top 10%, top 1%, top 1/10 of 1%. And it's absolutely unambiguous that that monetary policy has increased wealth inequalities.
Joe Stiglitz, I was talking with our Sally Bakewell, who's really, really looking at the great divide that we see on the streets of New York, or frankly, I think across any of this nation, of small business flat on their back. We have financialized the world. There's no question we've done that for the benefit of the upper X% or others. How do we get back to it? How do we escape and definancialize in a constructive way?
Well, I think, first of all, we have to do three things. We have to rewrite the rules of the market economy. There's too much market power at the top. We talked about it in terms of the Silicon Valley giants, but there's a lot more throughout the economy. We've weakened the bargaining power of workers, and that has contributed to inequality. We have rules that have led to that excessive financialization that you talked about before. Secondly, we have a tax system where those at the very top actually pay a smaller percentage of their income than those down below. You know, Warren Buffett actually complained about it, saying, it was wrong that he was paying a lower tax rate than his secretary. There are a lot of wealthy people who recognize that this is actually bad for our economy and morally
Yeah, but
wrong.
Joe, I mean, if you sum up the taxes that the rich guys are paying, it's a pretty high marginal bracket. It may not be, Rockefeller 72% and all that, but if we sum every tax up, it's there. How do we definancialize and deploy capital to people starving for capital? Apple Computer is not starving for capital. They can get any billions they want. What about the small business person on a corner in Tulsa, Oklahoma?
Well, that's where we have to refocus our banking system. Banks were always at the center of providing capital to small, medium-sized businesses. If you're a small business, you don't go raise money on the capital market. You go to your bank.
Yep.
And the problem is that the banks over the last 30 years have focused their attention on things like issuing derivatives, CDSs, trading commodities. They found a lot more lucrative ways of making money, some of it actually market manipulation. So if we stop some of their bad activities, market manipulation, predatory lending, and encourage them to do what their mandate is, which is lending to small businesses, I think it would actually create much more opportunity.
I mean, Lisa, this is the heart of the matter. I'm just old enough, unlike the ancient Stiglitz, who really, really remembers this out of Gary, Indiana. But Lisa, there actually was a time where you did business with your local bank, or maybe the regional bank.
Yeah.
And it's evaporated.
And actually, the regional banks, anecdotally, have been pulling back on credit. Professor Stiglitz, I'm not going to refer to your tenure or, in terms of teaching or anything that Tom was talking about in terms of ancient history. I will say, though, going forward, how does the economic profession, how do you as a Nobel laureate get your voice heard to the degree that it needs to be heard by policymakers who say economists have gotten it wrong numerous times? Why should we follow a theory when free market economics has led to the power of the United States over the long term?
What actually hasn't been free market economics has led to the success. If you look at all the innovations that have been the basis of U.S. success, all those innovations have been supported by the government. The internet, the advances in medicine that we're all looking for. Who did the research that led to DNA? Who did the research that led to all the major advances in biology? It's the government. So one of the things I call for in my book, People, Power, and Profits, is recognizing the success of the United States has in the past been based on a balance between the market, the government, and civil society. We lost that balance beginning with Reagan, that said the government was the problem. We now, in this pandemic, have seen that an ill-prepared government is not there when we need it. And I think the strongest argument for what I called for in my book, People, Power, and Profits, for a new social contract with a new balance, has been precisely the failures that we've just seen in this pandemic.
Just Tickets, we've got to leave it there. Thank you so much, and particularly thank you for your comments on Chair Yellen early in this good discussion. The laureate from Columbia out with a new book on people, power, and profits. It has been an extraordinary day. Lisa, really, I guess it's right on cue. Things heating up. There's no other way to put it.
Yeah, well, we're getting very close to the election, and really the conviction in markets is sort of shocking, given where we were just a few weeks ago with people counting on several months of a contested election. That fear no longer in markets.
Yeah, I wasn't talking about the markets. I was talking about Faro. I mean, Faro just fell apart. There's no other way to put it, right?
The mute button did him in, Tom.
I mean, you know, he just fell apart. Well, we're going to do this tomorrow again as well, which is fun. We'll see you at 6 a.m. Tomorrow on the simulcast on Bloomberg Television, of course, on TV and radio from 7 to 9 a.m. as well. The interview of the day, Ted Cruz, just out on Fox, skeptical on stimulus, the other side of the aisle, the other side of the building. Speaker Pelosi in conversation with David Weston. Look for that, I believe, in the noon hour, scheduled today. Futures up 15, Dow futures up 120. Stay with us through the day. This is Bloomberg Radio and Bloomberg Television.
Some things you see coming, some things you don't. The trick is to be ready for anything. John from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
Live coverage of the final presidential debate on Thursday at 8:30 p.m. Eastern Time here on Bloomberg Television and Radio.
From New York and London, for our audience worldwide, good morning, good morning. This Tuesday morning, equity futures up 12. We advance a third of 1%, and we begin with the big issue. 2 weeks to go. Former Vice President Joe Biden urging unity in North Carolina.
I'm running as a proud Democrat, but I will govern as an American president. No red states, no blue states, just the United States. And you, too, have a sacred duty to vote, and it matters.
President Trump pushing for a different kind of unity, a bipartisan deal for another stimulus package.
Nancy Pelosi, maybe he's coming along, we'll find out. We want to do it. I want to do it at a bigger number than she wants. That doesn't mean all the Republicans agree with me, but I think they will in the end.
With time running out on a pre-election deal, Speaker Pelosi seeing signs of progress.
At last, finally, they have come to the table, and we're going to try to get something done. And I tried to make tomorrow a time where we would have exchanged all of our differences of opinion so that we can, and numbers and paper, so that we can see. Let's make a judgment. We may not like this, we may not like that, but let's see on balance if we can go forward.
And with the administration and Democrats narrowing their differences, where's Leader McConnell? Well, the president is urging both sides to make an agreement. Senate Majority Leader Mitch McConnell seemingly going his own way, pushing ahead with plans to vote on a smaller-scale stimulus effort that both sides oppose. Let's bring in Kevin Cerulli, Bloomberg Chief Washington Correspondent, for more. Kevin, once again, same story, except this time apparently there's a deadline. Is there actually a deadline?
Yes, there is. This is the final chance for there to be some type of agreement before the election on November 3rd, Jonathan. Look, I've been speaking with sources on both sides of the aisle, and from the McConnell camp perspective here, they view this as really an opportunity to really represent a wide contingency of conservatives, not just in rank-and-file members and not just from deeply conservative districts and states across the country, but also in the business community who are a bit apprehensive in terms of injecting this much stimulus into the economy, and they view it really not as an opposition to stimulus, but this much stimulus, upwards of $2 trillion. Now, from the president's perspective, he feels that this would be able to benefit not just the economy, but as well as many of the Senate races that are in play. Case in point, North Carolina, where which is a much more purple type of state, a battleground state where Senator Tom Tillis, an incumbent Republican, is up for re-election against Cal Cunningham, a Democratic challenger. That is a brawl of a political battle in that state. And a new ABC poll has Joe Biden up 2 percentage points to 48% to 46% respectively. Well within the margin of error, but a good illustration of how stimulus is impacting not just the presidential level, but also the state level as well.
Kevin, the president saying earlier this morning that he expects Leader McConnell to be on board if there is a relief plan. Now, my question is a simple one. Have we heard that from Leader McConnell? Has he given any suggestion whatsoever that he would entertain anything like the $2 trillion that's being discussed on Capitol Hill?
He has not. And from Leader McConnell's perspective, he feels that by going on board with the upwards of $2 trillion bill, that would put in jeopardy some of the other conservatives and really even stoke the flames for a grassroots political uprising of sorts, akin to what we saw after the 2008 collapse with the rise of the conservative Tea Party movement. So they're looking at this from two different perspectives, the president's camp as well as Leader McConnell's camp. But it's you know, again, still a question. This deadline of November 3rd from Leader McConnell's position feels a bit artificial in the sense that everyone agrees that there should be more stimulus. It's just a matter of how much and when that comes. But it's a gamble because the political capital calculation changes after the election.
Kevin, great to catch up, sir. 2 weeks away from the election, 2 days until a debate in Nashville, Tennessee. Here's the price action 25 minutes away from the opening bell in New York City. Equity futures were much higher than where they are right now, up 13, up 0.4%. We rolled over about an hour ago on a story from the Wall Street Journal and some headlines just dropping across the Bloomberg. For a little bit more clarity on that developing story, here's Abigail.
the Bloomberg terminal right now, and we have Google accused by the U.S. The U.S. is filing an antitrust lawsuit against Google in federal court. This is considered to be the most significant antitrust action in decades, and of course, Google is being accused of using their monopoly-type power, 90% of the U.S. search market, to the disadvantage of competitors. Google, John, is not doing all that much on this news right now, down about 0.4% in the pre-market. As other headlines come out, we will, of course, be breaking those. But again, the U.S. is suing Google in antitrust proceedings.
Abigail, thank you. We'll touch base with you in about 25 minutes' time on that story. Thank you very much. On the politics, JP Morgan's David Leibovitz warning investors about getting too distracted over the policy debate. He writes the following: markets seem to be entirely focused on the outlook for policy, which is fair given the central role it will play keeping the recovery on track. However, messages from the economic data may be as, if not more, important. David, I'm pleased to say, joins us now. So, David, let's talk about it then. What's the message from the economic data right now?
Well, it's interesting. You know, when we look at the numbers we got last week on retail sales and industrial production, you saw a retail sales report that was very strong, but some industrial production numbers that slipped a little bit. And I think that the message here is that, you know, when we look at the economy, the easy money has been made. The easy gains are now behind us, and the recovery is going to be more challenging from this point forward. We have noticed that there's been a pretty tight correlation between income growth and retail sales. And so my biggest concern is that in an economy which is 70% consumption, you begin to see that income, which was coming from the government, roll over. Retail sales are going right along with it. We are already expecting the pace of economic activity to slow in the fourth quarter, and the lack of more stimulus really just adds insult to injury.
You do realize, David, when you say the easy money was being made, hardly anyone felt like that was an easy moment coming out of March. Where was the easy money, David, and did you make it?
So I think, you know, when we think about the equity market, obviously the Fed's injection of liquidity has been significant and pushed, you know, the high quality growth names to near record highs. My point rather was with respect to the economy. And if you think about the unemployment rate, just as an example, the unemployment rate spiked to a level of 14.7% in April of this year, and has since come down to a level of 7.9% in September. I mean, the speed with which things have moved has been significant. And my point was rather that going forward, both the recovery and gains in the equity market, I think, are going to be more challenging than has been the case up until this point.
I want to ask you about potential downside as well. This came from Mike Wilson of Morgan Stanley. He wrote the following: with so many uncertainties over the next month, we think another 10% correction from Monday's highs is the most likely outcome in the near term before this bull market can resume, at least at the index level. Do you get the feeling, David, given all the uncertainty you think we still need to clear, that a period of consolidation is on the cards here?
You know, I wouldn't be surprised to see markets consolidate a bit, you know, as we get closer to the election, and then potentially in the aftermath of the election, depending on how clear the result is. You know, we did see that consolidation earlier in the fall, kind of after those all-time highs at the end of August. September was a little bit of a struggle. I wouldn't be surprised to see that again going forward. Again, you know, when we look at the valuations of the big mega cap tech stocks, which have obviously done so well, you know, their elevated positioning is much more neutral as opposed to everybody being underweight equities, which was the case over the past couple of weeks. I think, again, you know, we're getting to a point where the rest of the market needs to participate. It can't be all about 5 or 10 names in the S&P 500. And unfortunately, the rest of the market has a much greater cyclical orientation, which is going to be, and their outperformance is going to be driven by the economy coming back online. And so kind of bringing it back to where we started the conversation, if we are getting to a juncture where economic activity is slowing and the policy support that's so essential to keeping things on track isn't necessarily there, you know, I wouldn't be surprised to see some consolidation, because in order for markets to continue grinding higher, there needs to be participation from more than just the top 10 names in the S&P.
Well, David, let's think about when that moment peaked earlier this year. First week of June, 10-year nominal yields peaked post-pandemic, first week of June. S&P 500 banks, post-pandemic, peaked first week of June. What was it about that moment contrasted with now, David? What's the difference? Where did the optimism go, and what's hanging on it?
So I'm not sure that the optimism has necessarily disappeared. Rather, I think that the optimism is just somewhat dormant. If we go back to June 1st, we had gone through that first wave of infections in the tri-state area and other parts of the United States like California. We had made it through that. We had begun to reopen the economy, and everybody was feeling very confident that maybe this was going to be a smoother process than a lot of people originally expected. Obviously, then over the month of July and into the beginning of August, we saw that second wave of infection. Markets seemed to shrug it off, hitting those all-time highs towards the end of August. And so my thought here is that, again, this is clearly going to be a more challenging and lengthy process than a lot of people may have expected earlier on this year. I don't think that means that the recovery is going to be short-circuited, but I always come back to the fact that in the United States, more than 80% of private sector employment is in services, and that's the area that is going to remain under pressure as long as social distancing remains in play. And so to get the economy fully back online, the bottom line is we need a medical solution, and there are obviously questions around that. There are questions around reopening the economy, and policy, again, is the bridge that can get us to where we need to be. And so I do think that there's room for yields to move higher and for us to get back to where we were over the coming quarters, but I don't think it's necessarily coming anytime soon, given the logjam that we see in Washington.
David, great to catch up, sir. Always good to see you. David Leibovitz there of JP Morgan, about 20 minutes away from the opening bell. Equity futures up 15. We roll over a little bit on Alphabet. Google down about 1/3 of 1% on that story. Abigail's back with us. Hey, Abigail.
Hi there, John. Well, yes, a really significant story developing here. This is the U.S. is filing a lawsuit against Google, an antitrust suit, the most significant in decades. This, of course, saying that they have abused their market power. They do, of course, dominate 90% of the U.S. search market. So the U.S. is filing an antitrust lawsuit against Google in federal court, and again, considered to be the most significant antitrust action in decades. It's not exactly new, John, because we've seen moves in this direction over the last couple of years, but it does feel like it's coming out of nowhere. Nonetheless, the stock down just about 0.4%, so investors perhaps thinking that it won't happen all that quickly. In addition, Alphabet on the year up just about 14% relative to Apple, which is up much more. So in some ways, you could make the case that this stock has been penalized on the year, perhaps in anticipation of something along these lines. Turning to other movers, IBM is down 3.8%. Their quarter, they did beat, but growth on a year-over-year basis declining. The outlook not great. The cloud business not great either. Intel, of course, is unloading or selling its storage unit to South Korea's Hynix for $9 billion. And P&G, Procter & Gamble, popping on a very solid quarter. They have also raised their full-year view, appearing to benefit from the pandemic. But the big news on the day, of course, is the U.S. filing that antitrust lawsuit against Google in federal court.
Abigail, thank you. More to come. Coming up next, record-breaking crowds casting ballots throughout the country with just 14 days remaining until the U.S. election. That conversation up next with PGIM's Greg Peters. Looking forward to that from London and New York. This is Bloomberg.
Women leaders were actually better at controlling the deaths from COVID-19. Do you think out of this pandemic, we'll see more countries be willing to elect female leaders? When we look at women leaders, we tend to project on them baggage that they shouldn't bear.
Women are given an opportunity when no one else wants to do the job.
Women had a very clear objective. They wanted to save lives.
The women leaders, if you look at their careers, have also built up a level of trust.
In fact, women have to be better at communication in order to be elected
as leaders, whereas this doesn't hold true for men.
We need to get those sexist stereotypes out of our head and give women a fair run for leadership.
Trying to change the stereotypes about women is not only the business of women, but men have to be part of it.
We explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
Valuations, particularly, sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
It's time to restore America's soul. It's time to rebuild the backbone of America, the middle class, and this time bring everybody along, no matter your race, your age, your religion, your gender, ethnicity, or disability. We can do this.
With your vote, we'll continue to cut your taxes and regulations, maintain energy independence, which we have now, strengthen our military, support our police, protect our Second Amendment.
President Trump and Democratic nominee Joe Biden campaigning ahead of their final debate Thursday night in Nashville, Tennessee. The former vice president leading by nearly 9 percentage points, according to the latest Real Clear Politics polling average. This with just 14 days remaining until the general election. For more on how the market's pricing this, here's Sarah Ponzek. Hey, Sarah.
Hey, John. And that 14 regular days translates to just 10 trading days. So certainly investors are gearing up, and this is showing itself in the volatility markets. For example, if you look at the VIX, implied measures of stock volatility, we've seen relatively subdued volatility lately. Sure, just south of 30, relatively high. However, not much jumping around. However, in recent days, last week, if you look at the Bank of America Move Index, a measure of implied volatility for the Treasury markets, we saw the largest jump since March from record low levels. Now, analysts say that this is really pricing in the same thing, which is fewer fears of a contested election, more odds, higher odds of a Democratic sweep, that so-called blue wave, and therefore more fiscal expansion. Now, as TD Securities did highlight this morning, we're seeing this in the FX and rate markets too. We've seen a resumption of that bear steepening in the yield curve. If you look at the spread between 2-year and 30-year Treasury yields, hovering right there at the highest since 2017. Meanwhile, we've also seen a resumption of the downward trend in the U.S. dollar as we have seen odds of higher inflation picking up once again. That you see the Bloomberg U.S. dollar spot index in that orange line right there. Now, on the equity side of the equation, we have seen more and more calls for value outperformance from the likes of JP Morgan and Goldman Sachs, for example. Now, we have seen slight outperformance this month, value beating growth. However, as you can see here, value has still greatly lagged growth for this past year on a year-to-date basis and well beyond too. It's been very well discussed. Well, will we see a turn? But what do we expect in the short term? 2 weeks from today, that is election day. And in past years, the past 10 elections, in the 2 weeks prior to election day, we have seen an average gain of 1.5%. Now, 3 episodes have seen declines, 7 episodes have seen gains. But one thing is very clear, John, and that is that the countdown has really begun.
It has. 2 weeks to go. Sarah, thank you. 2 weeks until the election, 2 days until that final debate. PGIM's Greg Peters weighing in on the election's impact on markets. He writes the following: voters are saying the winner of the presidency matters more than at any point in the last 20 years, albeit less so for the markets. Regardless of the election, the golden age of credit thesis largely holds. Greg's with us right now. Greg, let's start there, that final point. What's the golden age of credit? What's the thesis, and why does it still hold?
Yeah, so the thesis of the golden age of credit is quite simply that bondholders are prioritized over equity holders. And so March's near-death experience for lots of these companies and industries really forced company management to focus on bondholders. And what does that mean? Well, that means pulling back on share buybacks, pulling back on CapEx, and pulling back on dividends, and prioritizing debt paydown and generating more free cash flow. So it's really kind of as simple as that. And so I think this is a multi-year, multi-quarter thesis, not just a short-term thesis.
Are you actually seeing leverage come down, though, Greg? And do you expect it to come down in the future?
Well, just coming down organically, right? Because it spiked in the first quarter just because there was no cash flow. And so it is coming down organically just by virtue of these companies opening back up again. But the real important story is you're seeing a refitting of the debt maturity wall and the coupons. And so there's been lots of talk about this record issuance in the corporate bond market. And indeed, that's been true. But if you dig deeper, what's happening is that companies are actually paying down higher coupon, shorter maturity debt and terming it out with lower coupon debt. And all else equal, that really makes the balance sheet that much better. So I think that's the story. I think we're setting ourselves up for when the cash flows do actually start to turn in a more sustained, meaningful way, that these companies will have the ability to delever.
So, Greg, this might sound like a bit of a funny question, so forgive me, but if they're managing the maturity profile and people are bidding up the debt when it comes to market, yields fall, better maturity profile, pricing in longer dated assets onto the balance sheet, Greg, does it become a momentum trade? Do people just start chasing the same credits because they know yields are now lower, the maturity profile has improved, therefore the credit has improved, therefore chase it again? Does it start to feel like that?
Well, Jonathan, what you defined is really, in essence, QE, right? So, yes, I mean, what you're seeing is that with real yields being negative and interest rates at zero, you're forcing investors into all these types of risk assets, including credit. So, yeah, what I do think you're forcing investors out of cash and safer assets into more risky assets. And ultimately, that'll play out, but I don't think that's going to play out over the near term. But yeah, I mean, you're describing QE, Jonathan, and that's what investors are following.
So here's my question then. If you're being forced to buy riskier assets, why is that the golden age for credit, Greg?
Well, force is a strong term, Jonathan, but I think
your words.
You are being gently nudged, not so gently nudged, because the reason why we're in the golden age is because your alternative is zero or negative real rates, and that matters. And quite frankly, let's go back to the fundamental thesis, which is these companies are actually repairing their balance sheet. So as a credit investor, you benefit from that fundamental improvement. So put the QE on the side. The tried and true way of outperforming in credit is when company management is behind you from a credit investing standpoint, and that's where we're at today. So I think that is actually more important of a thesis or the point of the thesis than being forced in because of QE. QE is just the accelerant, if you would.
Sounds like a golden age for the issuer and not the buyer, but that's a different story. Greg, just a final question from me. This election, you say, is more about sectors and not a broad market macro story. Greg, when you say that, what do you mean by it?
Yeah, so I have been surprised, Jonathan, at how quickly the market has latched onto this blue sweep, where if you go 3 months ago, that was kind of the dire outcome. So it has had market implications. So I don't want to say that it doesn't completely have zero implications. But I do think sectorally is where the rubber meets the road. And so we're focused a lot on energy, where there's a kind of universal negative view around energy. I don't think that's right. You'll see the consumer segment very different than some other segments. So to me, it's about the sectorial shifts. And if you believe this blue wave idea and thesis, then there will be a clear movement towards more green initiative, ESG, and those types of things, which I think is widely known at this point. But then what's also important is different tax around the consumer itself. Namely student loans and other things. So to me, I think it's around kind of how do you reposition your portfolio within the market, not an overall broad market view.
Greg, always an education. Thank you, sir. Greg Peters there of PGIM. Coming up on this program, the analyst action you need to know, the morning calls up next. This is Bloomberg.
saudara Miller nih. Ada 3 kelompok pengungsi tersebut yang sudah berpencar arah. Kemudian kami dari Polsek Banda Sakti berkoordinasi dengan perangkat desa Kampung Jomblang melakukan upaya pengumpulan secara persuasif serta minta tolong kepada warga. Alhamdulillah warga yang terpecah semuanya berkumpul.
About 5 minutes away from the opening bell, futures up 0.4%. Let's get you the morning calls. Some of the analyst recommendations on Wall Street this morning. First up, Piper Sandler upgrading Workday to overweight. The analyst expecting a promising 2021 with several catalysts driving subscriber growth. Citi raising its price target on GM to 57. The analyst seeing upside heading into quarterly results. And your third and final call from Jefferies, naming Snap one of its top digital advertising stocks ahead of earnings. The analyst seeing a number of opportunities to improve its monetization of products. They're three of the calls. Up next on this program, much more on the earnings front. Netflix, after the close, the commentary from MoffettNathanson's Michael Nathanson right here on Bloomberg.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
This is a market that over the past few weeks has made it clear it wants to go higher. it got a little spooked by the idea that geopolitical tensions are rising.
Don't shoot the messenger. Apparently, there is a deadline on Capitol Hill today to get a fiscal deal done before the election. I have no idea if the deadline is actually a deadline, but we're told there is one. That's all I'm going to say. Futures up 12. We advance a third of 1% on the S&P 500. NASDAQ futures up 18, up a little more than a tenth of 1%. There's the opening bell. Switch up the board in the bond market. 14 days away from an election, 2 days away from a final debate. Yields higher, up a basis point to 0.78%. In foreign exchange, Europe looking messy. The euro doing okay. Euro dollar 118.15, up 0.4 of 1%, and crude just about holding on to a 40 handle, down 1% on the session, $40 and around about 40 cents. That's the cross-asset price action this Tuesday morning with your movers at the market desk. Here's Abigail.
John, let's start out with this morning's big stock story, and that, of course, is the fact that the U.S. is filing an antitrust lawsuit against Google in federal court. It is expected to be the most significant antitrust action in decades. The company, of course, is being accused of abusing its power. They do own 90% of the U.S. search market. You can see Google off just slightly. As for the effect on the other big tech companies, Facebook, Amazon, Apple, they are basically higher. Apple down or up just slightly, basically flat as well. But there have been lots of shots across the bow on this one, with many of these big tech company CEOs appearing before congressional hearings over the last few years. And you could perhaps, John, make the case that some of this is priced into Alphabet. Since April of 2018, when Mark Zuckerberg first went to Congress, Alphabet is up 38% relative to Facebook, up 70%, and Apple up 166%. So investors may be not entirely surprised about this. Plus, timing, how long will this take? So again, right now, tech investors not all that concerned, at least right now. As for some of the other morning movers, let's take a look at some of the other stocks moving, including Philip Morris, down about 0.6 of 1%. They beat and they raised the forecast, but investors not liking it at this point. We'll be digging into that more. Travelers up 2.6%. They beat estimates on better underwriting. And then finally, Albertsons, the grocery store company, really popping sharply higher, up 6.5%. They beat. They also raised the view. It looks as though that grocery store chain is doing well in the pandemic, John.
Abigail, thank you. Thank you very much. 2 minutes into the session, equities up about a third of 1% on the S&P. Every single sector in positive territory this morning. Information technology, middle of the pack, still up by about a third of 1%. But this is the developing story for the sector right now. What is happening with Google? For more on that, Kaylee Lyons joins us. Hey, Kaylee.
Hey, John, well, it may finally be the day of reckoning for Google. We've long awaited this antitrust lawsuit, but finally was filed in federal court by the DOJ, and 11 Republican state attorneys general also signed on to the complaint. The suit alleging that Google has violated antitrust laws by engaging in anti-competitive practices and abusing its market power as the world's largest search engine. Now, of course, Bloomberg had reported previously that the suit was arguing that because Google controls 90% of the global search market, that's because it is the default search engine on many web browsers, including those on Apple products, a privilege that it reportedly pays billions of dollars to Apple for. That, in turn, the argument goes, creates barriers to entry, meaning it's less likely that others can compete, and that harms consumers. Now, of course, Google's counter-argument to this is that because most of its services are free, it doesn't create any price problems for consumers. And it also says it faces plenty of rivals out there. Now, of course, because Google is so dominant in search, that in turn makes it dominant in the global advertising market. More eyeballs mean more advertising dollars. And Google, as you can see here on this chart, dominated about 36% of global advertising revenue last year. And it actually is facing a separate potential suit from the Attorney General over in Texas on that digital advertising market. Now, as far as this DOJ suit, John, it could take a year before it actually reaches a trial if it isn't settled beforehand. But I should note that our analysts here at Bloomberg Intelligence note, while this is significant, again, as Abigail said, the most significant antitrust monopoly suit filed in the U.S. in decades, just because it creates more scrutiny on Alphabet and on Google doesn't mean that it's actually going to change the near to medium term fundamentals of the company, John.
Kelly Lyons, thank you. Thank you very much. I think that's the story for money market participants right now. They see the headline, they look at the stock. The stock is up by 0.4 of 1%, called it a third of 1% higher. And for that reason, you move on with your trading day. Right? Michael McKee does not move on with his day. Bloomberg International Economics and Policy Correspondent. Mike, you think this is far more important than perhaps this price action suggests it is?
Yeah, I think, John, what we're looking at here is the beginning of a years-long effort to take down a lot of the FANGs and maybe break them up. This has been talked about in Washington for years, but there hadn't been sort of a consensus. Now there does appear to be. We mentioned that 11 attorneys general signed on, state attorneys general signed on to this Justice Department lawsuit, but some 46 states are investigating Google. Republican attorneys general signed on to this, but there are Democrats as well who are looking at this company and would like to see some action taken. One of the issues that they have is that Google controls, as Kaylee was saying, the online advertising search market. They basically, in the way that the old movie theaters were vertically integrated, they control everything from who gets to be on there to how much it costs, and they're the middleman who places the ads. And so the argument is yes, the Google search engine is free, but companies that advertise on Google have to raise their prices to you in order to be able to afford that. Now, this is a political effort, certainly, but it does seem to be a bipartisan one. It really doesn't have anything to do with Donald Trump's complaints about unfairness. It has to do with the business practices of what's now become one of the biggest companies in the world.
Michael McKee, thank you, sir. We got lucky this morning, not just because we have Kelly Lyons and Michael McKee, but also because we have Michael Nathanson of MoffettNathanson, who we thought we were going to talk to about Netflix, and I promise we will do that in just a moment, sir. We've got to start with Google. Michael, let's start right here. For investors in this stock this morning, what's your message for them?
Well, John, good morning. I mean, again, as you can tell by the price action, this is long expected. You know, I've heard everyone on Bloomberg talk about this, and this issue is incredibly complicated. You know, so our message would be, we've spent a lot of years looking at this issue. We're not antitrust attorneys. It does fly in the face of antitrust, you know, theory, which is always about price, you know, consumer price harm. But in many ways, Google could be better off if, at this late stage in search, that they don't pay Apple attack rate to be on Apple, and they just compete without paying TAC. And how many people have, you know, Microsoft, a Microsoft browser but switched to Chrome, right? So I just think their search is so much better than anyone else's search engines. And if all of a sudden the world said, look, no more tying, you know, everyone has freedom of choice on picking their own search engine, they would win. They still would win. So is this: if a company ever gets fully broken up, this stock has been literally underperforming those FANGs for 2 years now, right? It's been an overhang for 2 years. Let's see the complaint. Let's see what they found. These incredibly complicated issues. What Michael is saying on consumer harm, the cost of marketing has been staying flat for years because search marketing is so efficient, because you identify someone's intention to do something, and therefore, rather than casting a net far and wide to find 1,000 people who want to lease a new car, if I type in leasing a new car, that's a valuable lead. So I don't really see, by looking at all the ads we studied, that there's been unfair, you know, consumer harm by the growth of search, right? It does. I don't see that in all the studies we have of ad spending, right? So I think it's a really complicated issue. To your point, so today's price action is very, very muted, but I think this is going to take a long time to play out. I really do.
Well, Michael, let's talk about what a long time is. Define that. Give me a time horizon. What are you thinking?
5-7 years, right? Like, you know, Google.
Really?
Yeah, well, Google's pushed back on this for a while. They totally disagree with this. Maybe there's a smoking gun, right? So we don't know what's been found in discovery. You know, maybe there were some smoking gun emails that make incredibly obvious that there's some illegal behavior here. But I think they're going to fight this because I think they don't see their success is based on what they believe is superior engineering, and I don't think they're going to give up on that.
Stock up right now by about 1%. This reminds many people, of course, of Microsoft through much of the 90s. Yeah. Let's move on to the other story, because I know we've got to let you go, Michael. We've only have a short amount of time with you. I know you're busy. Netflix. You think there's a 99-2000 parallel going on here. Michael, walk me in how and where.
Well, I am one of the few analysts maybe who still working from the late 99s, 2000s. Basically, what's happening is that people are just moving more and more to price to sales multiples, right? So we've stopped looking at free cash flow, John, earnings, even EBITDA, and we just look at price to sales multiples, right? And anytime these stocks go up, the sell side just raises price targets by changing the price to sales multiple. I saw that in the late 1999, 2000 period, where it was just too easy to keep raising price targets. And it feels to me, and I'm not calling the whole market dishonest, but because the 10-year, what'd you say, it was 0.78 right now? It's just so easy to look out 5 years and put a multiple on something. But I don't know, it feels to me that clearly we're in a growth momentum bubble. I don't know when it's going to pop, but I've done this job for 20 years, and it just reminds me so much of when I first started and just the ease at which people kind of gave up looking at earnings and cash flow to move to multiples on sales. So that's what I'm referring to, John. I don't know if you feel the same way, but the ease at which people raise price targets on large cap companies is just, to me, astounding.
Well, Michael, my views on this don't really matter. I think what's interesting now is that you work for a firm that has your name in it. And as you know, in the late 90s, if you were sitting on the sidelines watching all of this stuff happen and saying you guys are getting it all wrong, there's a real career risk in that. As you sit on the sidelines right now and everyone says this is the metric to watch and this stock is still surging, what's the inflection point, Michael? Your experience, walk me through it. Be honest, be transparent. You always are. When do things start to change? When do people sit there and say, you know what, the price to sales metric wasn't the right metric? Is it just price that starts to change the narrative? Is it something outside of this sector that readjusts price, high yields? I don't know what it is, Michael, but what changed it then and what will change it now?
Well, there was just, at one point, there was just a lunacy on, 2000, 2001, where basically, every single dollar was thrown against those internet stocks. And then other sectors started to perform. You basically need, I believe, and you probably would agree, rates to start rising, yields to start going, the other way, people to look at corporate activity, right? So I cover a lot of media stocks, which we don't recommend, but they're trading at 20% cash flow yields, John. Meaning for every dollar of stock price, there's 20 cents of cash flow. We're not recommending that, but at some point they'll be LBO'd, they'll be taken out, and then greed will start looking at things that are just cheap on cash flow. So we don't know when that's going to be, but I would think you look at rates, and rates are not going the right way right now, as far as they should. But maybe there'll be a stimulus plan, maybe there'll be a blue wave that will just change the psychology. And then there's M&A and just the fear of missing out on more M&A, right? They just unwind some of these things.
Michael, always great to catch up. Good friend of this program. And I always forget the camera's there when we're talking. Michael Nathanson there of Moffett Nathanson. Luckily, I stay professional and don't give my view on stocks like Netflix. I'll leave that to Michael. About 12 minutes into the session, equities up by 0.6%, the Nasdaq up by 0.5%. Coming up, European leaders reviving lockdowns and intensifying efforts to slow the spread of the pandemic. That conversation is coming up next with Morgan Stanley's Matt Hornback from London and New York this morning. Good morning. This is Bloomberg.
Okay, ladies and gentlemen, as you can see, I put a stop for my two positions on euro. First position, as you can see from ticker, was opened, and I still hold at 118.56.7. And second position at it's supposed to be 117.173 as far as I remember. 117.135. Okay, so stop, I placed stop. If it will reach this level, well, both two positions will be closed. Let's see when I will collect my profit.
Decirle a los empleadores que fueran más humanitarios con los trabajadores, que les hagan valer sus derechos.
viviendo en dos casas, en una 50 personas y en la otra otras 50. En cada casa había 5 habitaciones. En cada habitación había de 3 a 4 camas abarrotadas. Vivíamos de 6 a 7 personas. Un baño para cada habitación y una cocina para todas.
Una vez que nos atendieron en el hospital, al salir nos avisó una compañera que ya nos habían reportado a migración.
Gracias a Dios ahorita de salud yo estoy muy bien, pero en lo moral no estoy muy bien, porque a causa de esta enfermedad yo perdí todo, perdí mi trabajo.
Yo creo que mi caso resulta un gran problema de cómo las personas migrantes estamos en riesgo de explotación por parte de los empleadores.
Is it your expectation to do this another 5, 10, 15 years?
It's like Whole Foods is my daughter, and I literally married my daughter off to the richest man in the world. I just kind of came along to make sure the marriage settled in well.
When I stopped doing big meetings, I started wearing masks. So it was at a time when the science was saying, and his key people, Dr. Fauci, were saying, you should be taking these precautions.
Biden wants to lock it down. He wants to listen to Dr. Fauci. He wants to listen to Dr. Fauci. And don't forget, Dr. Fauci, what he said is, no, don't close it to China. I said, I'm sorry, doctor, you're a wonderful man. And he is a nice man. You're a wonderful man. I'm closing it.
Presidential candidates clashing over virus politics in the United States as Europe backpedals, reviving tighter restrictions as leaders grapple with a struggling economy and surging cases. Some of the region's largest cities enforcing stricter curbs, with Ireland returning to lockdown, enacting some of the toughest measures on the continent. Bloomberg's Maria Tadeo joins us now from Brussels with the latest. Hi, Maria.
Well, Jonathan, it's a serious situation. If you look at what the European continent looks like, you are seeing more cases, more countries being affected, but also more restrictions coming into play. And this is where it gets interesting for me. For weeks we had markets taking comfort in this idea that lockdowns were a thing of the past, that we were never going back to the scenes that we saw in March, that if anything, this was going to be very tailored, very, very regional. But if you look at the measures, and if you look at a country like Ireland, they're essentially going back to the measures we had in March, which is pretty much a full shutdown, except for things that you really need, the essentials. If you look at a country like Belgium, where I'm at right now, all restaurants are shut. There's talk of a circuit breaker, of a 2-week lockdown to try to contain those cases that we are seeing now. So I would really point out to those two figures there in those two countries, which really signal that the tone and the mood has really changed over the past week in Europe. The situation has become serious. We've heard it for a number of leaders now, too, in a number of countries, but also this idea that perhaps a regional lockdown, that very small, limited measures may not be enough to contain coronavirus, especially if you counter here that we are headed into the flu season.
It's getting colder, that's for sure. Maria, thank you. Joining us out of Brussels. It is the soft spot in the global economy right now relative to the optimism around it just several months ago. It is Europe. Elsewhere, doing okay. Morgan Stanley's Matt Hornback expecting growth out of the US and China to strengthen the risk backdrop, writing the following. Markets are coiling up in anticipation of the US election. Meanwhile, the global economy is defying the foot placed on it by COVID-19 and the lack of more fiscal stimulus. Once the election and associated uncertainty passes, we expect a risk-on tone to strike with a vengeance. Matt joins us right now. Now, Matt, you're familiar with the research from Mike Wilson. You guys work close together. He's looking in the near term at a 10% correction from Monday's close. And I just wonder, Matt, from your point of view, just piece all of this together, because I know there's a coherent voice coming out of Morgan Stanley as a house over the last several months. Piece together that short-term caution with that medium to long-term optimism.
Yeah, John, the way I would frame it is that we are heading into a period of tremendous uncertainty with respect to U.S. politics. We've got obviously a very important election coming up. We've also got other events around the world, Brexit being front of mind at this point in time. And of course, we have important phase 3 trials with respect to some important vaccines, right? So I would say we're heading into a very uncertain period of time, but this too shall pass. And I think once this uncertainty is in the rearview mirror, it's going to unleash all of the liquidity that central banks have been providing, a lot of which has been essentially saved in a combination of bank deposit accounts and money market funds. So we think that once we get into the new year, that liquidity will make its way around high quality markets, and that will boost prices, broadly speaking, John.
So, Matt, one thing you have done is pushed your more constructive macro view through the bond market, short treasuries, long bonds. Have you taken that trade off now, Matt, or is that still on?
No, John, we still very much prefer owning duration in Germany over duration in the United States. We think that the risk reward of that trade is very attractive. It plays both off of the supply dynamics that we expect will accelerate through the next several months. And it also plays off of just the uncertainty with respect to COVID-19 that, as you just mentioned, was really increasing in Europe, not as much in the United States.
So we've had the equity call, the bond call. Let's layer on the FX call. Can you reconcile that with a stronger euro right now, Matt? Because there's some of the calls I'm hearing right now, even with everything you've just said.
Yeah, John, we have been more neutral on euro dollar over the past couple of months. As you recall, we were quite bullish on the euro earlier this year. And once we got up to about 118, 119 on euro dollar, we moved to a neutral stance. And since then, it's been essentially range trading in a sideways pattern. We do think as we make our way into the new year, John, once we have more clarity on vaccines, we will see the euro continue to appreciate versus the dollar. Or said differently, we expect the dollar to depreciate against a broader set of currencies, of course, including the euro. That is a trade that we think will accelerate as we make our way into the new year. But of course, part of that, John, depends on the outcome of the election. If we end up getting a blue sweep, which is the outcome that polls and some models are favoring at this point, and that leads to expectations for a dramatic increase in U.S. fiscal stimulus, that we think could put downward pressure on the dollar, John, and that would, of course, work against the euro as well.
Matt, just quickly, before that trade broadens out, and you have said there we need a vaccine and other things as well, specifically going into the election, what's the dollar bearish pair that you'd like to play that dollar against?
So John, we have a couple of choices that we've laid out for our client base. Number one, we are bullish on the Canadian dollar. Number two, we are bullish on the British pound. And number three, we're bullish on the Australian dollar. We think those three currencies have the best chance in the near term for appreciation against the U.S. dollar.
Still so constructive. Matt Hornback, cheering the market up. Matt Hornback and Morgan Stanley, thank you, sir. Coming up on this program, the market moving events you need to be watching. That'll be next in our trading diary from London and New York. This is Bloomberg.
has been interrupted. Uninterrupted service is peace of mind. Juicy from customer support is responding to a 500% increase in daily call volume, no matter what. We keep on, so you can keep on.
What is happening today in India is actually a determination to rebuild our economy.
India has an opportunity not only competing in the space of the factory of the world, but a very big opportunity to compete in being the office of the world.
.25 minutes into the session, equities doing okay, up 0.6% on the S&P, up about 0.4 on the Nasdaq. The curve steeper, bit of pressure on the long end. 30-year yields up almost 4 basis points. 10s up 2 or 3, approaching 80 basis points on a 10-year. That is the price action. Here's your trading diary. Italian and Spanish prime ministers holding a joint news conference on the pandemic at the top of the hour. Look out for that. Coverage coming up with Guy Johnson and Alex Steele. The Fed's Randy Qualls speaking at 11 a.m. Eastern, followed by a slew of Fed speak through the rest of the week. President Trump participating in a town hall at 3 p.m. Eastern. And results from Netflix after the close. Another round of jobless claims coming on Thursday. Friday we get some PMIs out of Europe. And the main event of the week in between, Thursday evening, a debate in Nashville, Tennessee. From London and New York this morning, good morning. Thank you for choosing Bloomberg. For our audience worldwide, this was the countdown to the open. Catch me on Twitter at Ferro TV. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
Months after Hurricane Maria, Puerto Rico is still in peril. Huge swaths of the island are still without power, running water, or access to medical care. Experts estimate that it will take years before these services are restored island-wide. Much of the blame has been placed on FEMA for a slow response in comparison to recent disasters on the mainland. But recovery from a disaster of this complexity and scale has proven more challenging than anyone anticipated. And filling the gaps between an overextended public sector and a suffering populace falls on the private citizens. Robert Anderson is a Puerto Rico resident of 4 years.
The eye of the storm came in south of El Yunque, swept up towards San Juan, and out to Arecibo. Everything on the right-hand side is what we call the dirty side of the storm.
This isn't his first time in a disaster zone. With a military and telecom background, Anderson worked on repairing damaged cell phone towers in New Orleans after Hurricane Katrina. Some might be tempted to label him a disaster capitalist, seeking lucrative government contracts for his expertise. But as Anderson finds himself in the middle of a humanitarian crisis, he and his associates are developing a variety of pro bono recovery projects that target the island's hardest hit areas.
I see two Puerto Ricos. We're here in San Juan. They have telecommunications restored. They may or may not have power, but basic services are in place. They're able to get food. They're able to buy things. They're surviving. And when you look outside of the San Juan area, you can go 15 minutes from here and find areas that are devastated. I'm working on the devastated side.
Today, he's put together a boots-on-the-ground mission to provide medical care to some of the island's most isolated and vulnerable residents. Steve Berenbaum is one of Anderson's business associates. He offered an extra car and a set of hands.
So we received an initial report from a nurse that was out in the area. We're headed to the northeast region of Utuado for some people that are in need of urgent medical assistance.
Dr. Sally Priester is a physician from San Juan. She filled a van with medical supplies at her own expense and brought along a team of nurses. Google Maps estimated our first destination